Hello and welcome to Introduction Training for Payroll on the UAN software. You should have the UAN Introduction Training New Fiscal Officer Payroll Module exercise booklet. As we go through the video, you should be looking at the same page numbers in the exercise booklet. On the UAN Link website, the address is on your screen, you will see several phases of training for newly elected or newly appointed fiscal officers. We recommend that you visit the training area, choose transition, and review the 4 phases of training: orientation, prerequisite, introductory, and then finally proficiency to build your skills. This is an introductory course. We are simply introducing you to the UAN software. It's not everything you're going to need to know in payroll to continue. It simply gets you started. UAN videos qualify for Fiscal Integrity Act reporting. Please go to the Fiscal Integrity Act self-reporting portal at the website you see on the screen. Any questions or assistance, please direct those to Fiscal Integrity Act at ohioauditor.gov or give Janice D'Alessandro or Aaron O'Donnell a call at the number you see on the screen. They can help you with your self-reporting. UAN support will only be able to direct you to these people and the website for self-reporting. UAN is a division of the Auditor of State's office. We handle software support. So when you call us, we can help you with the UAN software. We will not be able to give you legal or tax advice regarding your payroll. You may need to hire a tax consultant or give Local Government Services, a division of the Auditor of State's office, a call to discuss procedures. On page 1, Chapter 1, your first day on the job, we need to recognize that in payroll training land today, our computer date is April 4th. So it is as if it is April 4th in training world. And we're going to use that as an example. As we move forward in the training, we will be moving the date forward to illustrate how work progresses as a month proceeds. But you will never change your computer date to do work in the UAN software. The computer date always remains exactly the computer date. Our change is only to show you the progression of time. On page 1, we want you to familiarize yourself with your pay schedule at your new entity. So what pay frequencies do you use? It means how often are people paid? What is the next pay date for each frequency? So there's a difference between the pay frequency dates and the paycheck date. When are people paid? What is payday? How do your pay period dates correspond with the pay date? So do they turn in their time cards at the end of the pay period and you pay them 2 weeks later? Or do you pay them 1 week later? Or do you pay them 2 days later? We don't know the answer to that. The pay schedule is set up at your entity by your governing board. In our class example, we only have 2 frequencies. Monthly for our elected officials, and all of our employees are bi-weekly. You may not be using those examples. Our next pay date for the elected officials are the first Thursday of the month, which is our meeting date, and that will be 4/7 in payroll training land. Our employees are paid every other Friday, and their next paycheck will be dated April 8th. Our pay periods are the dates that they earned the money, not the paycheck date. The pay period for the elected officials is always the previous month. So at the April meeting, my governing board is going to be paid for March 1st through March 31st. They are never paid in advance for their work. Our employees are paid for the pay period ending the previous pay date. So our pay period starts on a Saturday and ends on a Friday, March 12th through 25th. They're paid 2 weeks later. Notice that we've made a nice little cheat sheet calendar for 2016. We recommend that you do the same to keep track of your dates. We've made a solid block of our meeting dates. My monthly elected officials are going to be paid at the meeting. That's going to be payday and meeting date for the elected officials. And the pay dates for the bi-weekly, I've created a dashed block so I can tell exactly every payday. This calendar will be helpful to you. I also want to direct you to page 61 in the training booklet, On page 61, we show you an example of an Ohio Public Employees Retirement System tool for employers. If you go to the opers.org website, under Employer Tools, you'll find an area where you can put in your last pay period end date, and it will create a calendar for you so that you can always keep track of the last pay period that will report for each monthly report. It's very handy to have these cheat sheets available so you know what you're going to be doing. On page 2, familiarize yourself with the payroll process. When are the time cards turned in? Who approves the time cards before submitting them to you for payment? The fiscal officer doesn't approve time cards. Somebody else is responsible for overseeing the employees. They have to approve the time cards. The employee should sign their time card. Their supervisor, whoever that is going to be, should sign off on the time card, and then it comes to the fiscal officer as approved. You are simply paying what has been approved. If an employee uses leave, is there an approval form that must accompany the time card? In the larger entities, there are more structured policies, and those forms are required to be signed by the supervisor. If you are direct depositing payroll, how many days in advance must you have the payroll submitted to the bank? In most circumstances, that is 2 days before payday. So for our example, when payday is on Friday, I have to upload the electronic file by 2 o'clock on Wednesday. That means I need the time cards early on Monday in order to make sure that I can take time and get payroll right before uploading that electronic file on Wednesday afternoon. Familiarize yourself with your leave policy. What types of leaves are offered? Who is entitled to leave? How do they request time off for each type of leave? Do they have to fill out a form, or is it verbal? How is each leave type earned? Is it accrued by pay period, accrued by hours worked? Are they manually entered on the anniversary date or at the beginning of each year? How does the usage of one type of leave affect the accrual of another type of leave? When somebody takes a vacation day or a sick day, do they still accrue the same amount as if they worked? Your policy needs to determine this. How does the usage of leave affect the payment of overtime? Again, your policy would have to determine that. And did we permit the payouts of unused leave? Many entities have a very developed leave policy that states that if vacation, for example, is not used by a certain date, it is either lost in some cases, and that means if they don't take their vacation by the deadline, they lose the vacation. They don't get paid out, they don't get to take days off. Other policies say if they're not used by a particular date, they are simply paid out. And often the payout of unused leave is not pensionable for state retirement. And we will discuss that very last at the end of this training. Verify your employee setup. In the software, I'm going to take you to Payroll, Reports and Statements, Employee Reports. The Employee General Information is the report that will show you the payroll setup. There are many other employee reports on the drop-down list. I'm going to show you a very simple employee setup, and I'm going to click Display. This is the Employee General Information Report. Everything above the first line is personal information. You can see on the left, in the upper left corner, we have his name and address, his employee ID, those are internally set by your entity. And we see an email address, telephone numbers, and emergency contact. You may not have these filled in. In the center, we see the federal status. The employee would have turned in a W-4 for federal and an IT-4 for state. You should be able to find that in their personnel file. If you have EFT wages, that's the direct deposit of wages to the employee's bank account, you should see a yes, EFT authorized, and if the pre-note says no, like you see on the screen, it means they no longer receive EFT. They're receiving a check. So at some time, the employee may have opted out of the direct deposit. Over to the right, the pay status is active. The Social Security number is not going to show on this report. It is secure information. It's not going to print here. The date of birth may not be filled in. That's optional information. Their status, hire date, and track hours by, along with the OPERS and OP and FPF members date and OP and FPF hours base. If the employee was ever an OPERS member, you would see a date here that was the first date they ever became an OPERS member. The same with OP and FPF. All OP and FPF members require an hours base to be entered, and this number that appears on this report is what pulls into the monthly OP and FPF report. Below the line, we see the individual earnings. This employee is very simple. They have one earning. So I can see he has a salary, he's paid monthly, and his pay rate is $2,348. One of the first things you must check when you're a new fiscal officer is if all the pay rates in the software are set up correctly. If the previous fiscal officer set them up wrong and has been paying wages at the wrong rate, you do not want to continue that mistake. Notice that Brutus is in the administration department and he is paid from one appropriation account code in the general fund. The attached withholdings show the withholdings that have been added to the employee and attached to this earning. Notice that they're all active except the last one, cancer and disability. It's inactive. This could indicate one of two things. Maybe the township used to offer cancer and disability, but they don't offer it anymore. It has been deactivated. Or the township still offers cancer and disability, but Brutus opted out of the policy he no longer wants to be in, and now it's inactive. So inactive means it's not going to come out of the employee's paycheck. Let's scroll down a page. In this area, we see the listed withholdings. So up above under the earning, it shows what's attached. Here is the list of all withholdings the employee has added to their setup. Ohio and federal tax are automatically attached to every employee. You can't take them away. Medicare is required by all employees hired after March 31st, 1986. Notice that the Medicare rate is 1.45%, and you have two choices, Medicare or Medicare fringe benefit. There are zeros in the fringe benefit box on this form. That means Brutus does not have Medicare fringe benefits. He will be withholding the entire 1.45%. It's very important that if you see a percentage in the Medicare fringe benefit box, you check your local legislation or policies to find if this employee is entitled to Medicare fringe benefits. The fringe benefit means the 1.45% that normally would have been held from their paycheck is paid by the entity instead. They're taxed on this extra amount of money they receive the benefit of. Using a fringe benefit incorrectly or improperly is going to corrupt your taxes. The Medicare withholding also has to have the employer's share set up. The employer's share in this case is being paid from $1,110 to $1,300. OPERS Gov goes from page 1 to page 2, so you need to look at both areas. OPERS Gov has 3 different types that it could be. Up here you see OPERS Gov Regular, and that is just regular government OPERS. 10% is withheld from the employee check. There is no tax benefit. If you see the 10% there, your entity has not granted a tax benefit. The other 2 types are OPERS Fringe Benefit, and that means that the employer is paying all or part of the employee's 10% share. And if you see anything in the fringe benefit box, please look for the legislation that approves that and verify that that's accurate. The OPERS Gov salary reduction is a tax benefit withholding. It means that the 10% is withheld from the employee's check, but it's not taxed. When you retire, this portion, when you receive it, will be taxed. Make sure that if you see anything in the box for OPERS Gov salary reduction, that you have a salary reduction agreement with OPERS. It's not something the fiscal officer can set up on their own. You have to have the agreements on file with OPERS. Please verify that if you see anything in the salary reduction box. Moving down, we see there is a Buckeye Village income tax set for 1%, the health insurance, the dental insurance, and when the cancer and disability was being withheld, it was $5.79. Remember that cancer and disability, while it's attached to the earning, it is inactivated, and the $5.79 will not be coming out. So there are many things that you need to check on the Employee General Information Report. At the top, you want to check that the employee information is correct. Do you have the correct address? This will be important for the W-2s. Do you have the correct federal and state exemptions entered into the software? In the personnel file, you should find a W-4 and an IT-4 form showing these exemptions. Make sure that the salary rate is accurate according to your local legislation. Brutus is an elected official, therefore I would need to verify his elected salary is accurate for his term of office and the budget of the entity. Make sure that the account codes are set up properly. Make sure that the attached withholdings are a complete list of what should be coming out of the employee's checks. And then make sure that the Medicare and any retirement reflects the proper type. As we move forward in the day, we'll be adding new employees and we'll be going over the general information report after the employees are added. So we'll visit this again. Our next section on page 3, withholding agency details. And we've given you a grid over the next several pages as a beginning point. You need to know what withholdings are paid to what vendor and how often are you supposed to pay. Do you have regular fringe or salary reduction? And how do you pay? Do you send a check? Do you go to a website? Have you got the username and passwords changed to you? All these things you will have to learn. You probably will not use the grid that we've created over these separate pages. You might want to create your own grid in an Excel spreadsheet or on paper. The last 2 columns are going to be important to fill out, and we have a withholding payment report that will help. I'm going to close the employee reports and click on withholding payment reports. This is not in the book. You'll want to write this down. Payroll reports and statements, withholding payment reports. From the drop-down list, choose withholding payment detail. The software will always default to the month a last withholding payment was posted in the payroll software. In our training data on April 4th, the last payments were posted in March, so it's defaulting back to March. You change the date to what you need, but you do need to know the last payments made for each withholding. So when I look at this list, I can see all the withholding payments posted through the payroll software in the month of March. Notice that there's a payment to Buckeye Village income tax on 3/3. That can't be for March taxes. Let's take a look. I'm going to display that for our purposes and help you get familiar with this form. So it's the withholding payment detail for March. I can see in the upper left corner that the payment was to Buckeye Village income tax. The payment number is 66 and it's an EW, electronic withholding payment. The payment was posted in the software on 3/3 and right now it's outstanding. Yours may be cleared. What we want to know from this report is when was the last payment made? Well, you can see it was for 3/3, last payment date, but what was it for? What was the tax liability represented on this form? To find that, we look at the payment date column. This payment date column represents the paycheck dates of the employees. Paycheck dates indicate the tax liability date. And while you can see the pay period start and end dates, those have nothing to do with tax liability. So when I want to know what was paid on the 3/3 withholding payment, the employee payment date shows me that it was the February tax liability. I can clearly see there is a February 4th paycheck and February 12th and 26th. So I can see my elected officials and my biweekly employees. This is a February Buckeye Village income tax payment. Let's take a look at a state retirement payment. State retirements are not based on paycheck dates. State retirements are the only withholdings based on the pay period, when the money was earned. So you can never look at them the same way. OPRS and OP&F are our 2 state retirements in the UAN software. I'm going to choose only OPRS and display this report. When you're looking at a state retirement, In the upper left corner, we see the date the payment was posted, March 11th. It's payment number 83, 2016, and it's electronic withholding. But when I want to know the liability period, I don't look at the employee's check dates like I do for taxes. I look at the pay period end date. The pay period end date indicates the month this paycheck is reported on. And every one of our pay periods end in February. If you looked at the pay period begin dates, you would see that some of them began in January. That means nothing to the OPR's report. The end date determines when the entire pay period is posted. So for this pay period, 1/30 through 2/12, even though it starts in January, it is fully reported on the February OPR's report with the pay period end date. You don't need to manually calculate how many days get reported on each. You must report the pay periods where they belong by pay period end date. So I can see that this March 11th payment to OPR's was for the February OPR's report. And I can close that. You'll continue your investigation in all your last payments, and it will help you understand when items get paid. Notice that I have 2 petty court collections in the month of March. That probably indicates that this is a garnishment, and I'm supposed to pay that garnishment every time the employee is paid. You may see child support and other items in the same way. So complete your grid, make sure you know when was my last tax payment made, and understand that just because you see an electronic payment posted in UAN or a withholding warrant posted in UAN, it doesn't mean the check was mailed or the online payment was really made. You're going to have to go to the websites for the online payments and verify that this payment represents an online payment that was really made. The checks need to be clearing the bank. If you have a withholding payment posted in UAN for an older period and it's never cleared the bank, wouldn't you wonder whether or not that was ever mailed? You may find a stack of checks that have never been mailed and electronic vouchers that don't represent true online payments. So you'll have to check that and make sure. On page 8, we can show you another withholding report. I'm going to close the withholding payments report and look at withholding reports. The withholding summary is a very common report. People like to stay on top of their withholdings. Notice that it defaults to a setting for the original post date. This setting would be changed to pay period end date only when you're looking at state retirement. That would be our OPR's Gov and our OP&FPF. So if you have state retirement, Ohio Police and Fire Pension Fund, or OPR's, you would always change the setting to look at those. Let's begin. I'm going to look at all of the taxes first. Let's go ahead and choose back to original post date, and I'm going to look at the taxes first. I am not going to select OPR's or OP&F. I can select Social Security and hold Control and press U, and it will check all of the items up. That's just a shortcut. And I can check supplemental state withholding and press Control D for down. And it will select everything down the list. And now I can display. The withholding summary always defaults to the unpaid amount. Notice it says unpaid. So in the software, unpaid means no payment has been posted. The assumption is if you post a payment in UAN, you've either mailed the check or made the online payment to match. That may not be true. Notice that it shows all 12 months and the prior year. And now that you can see the structure of the report, I'm going to bump that up so you can actually see what it says. If you have items in your prior year withholding column after April, you've got a problem because withholdings from a prior year should have been paid by now or you would be incurring late penalties. In our case, the previous fiscal officer was keeping their withholdings up to date, and I don't have any prior year withholding problems. Notice that in January, I still have Little Village income tax outstanding, and February as well. This is not a concern if this is a quarterly tax payment. So quarterly tax payments are going to remain unpaid until it's time to pay them at the end of the quarter. Little Village is only withheld from 2 employees, and the amount is so little, the Village Income Tax Department told us to pay quarterly. So I report and pay Little Village quarterly, but everything else on this list is paid monthly. I can see that the previous fiscal officer has not paid March taxes yet. And because it's only April 4th, that doesn't indicate that they were doing anything wrong. It is usual to pay the taxes after the end of the month. And since it is the end of the quarter as well, I'll be paying the Little Village income tax. So in our case, I can see what's due. All of the regular withholdings, the regular type, anything that's not a state retirement, is going to be due at this time. I'm going to close that, and now we're going to change the setting. Let me unselect everything. I'm going to change to pay period end date, and I would only select the state retirement. I would never select taxes with the pay period end date setting. I click display, and again I see the withholding summary unpaid. We can see again that there are no prior year withholdings causing us problems. So if you have items in the prior year withholdings columns for your state retirement, you have problems that you are going to have to fix. Notice that January and February have already been paid. March is still outstanding, but remember, I'm not going to do the March OPRS report until I post the last March ending pay period date. So it may not be time. I'll show you how to check that at a later time. So I can see March unpaid state retirement. That does not indicate it's time to pay at this time. In order to determine what the last pay period posted was, I can look at a report. Wage reports. This is not in the book. You'll want to write this down. Wage reports, and from the drop-down list, wages and overtime summary. Now this is an excellent wages and overtime report, but I also use it to check the pay periods. When you mark it for the year, you're going to see the entire year's progression of pay periods and check dates. It will help you see payday and pay periods. I'm going to choose one elected official and one biweekly employee. And we'll click display for that report. Notice the block on the left. This is what we're looking for. This shows us the paycheck date and the pay period it was posted to. This is going to be very important to help you understand what gets posted next. I can see that Brutus, as the previous fiscal officer, was paid on January 4th at their January meeting for December 1st through December 31st. He's paid for last month. I can also see in February he was paid for January, in March he was paid for February, and that means the previous fiscal officer has not been paid their final check. You may find that the previous fiscal officer has already been paid for the last check they will receive. In our case, Brutus did not pay himself. It would have been premature. Payday is on the meeting date in the next month, and he left that for us to do. When I look at our biweekly employee, I can see the same thing, the progression of paychecks. If I looked at the calendar, that would be every 2 weeks. The exception is January 2nd is a day after payday because January 1st was a holiday. Make sure that you get board approval in advance for payday to be moved because of a holiday. Notice that they're paid for the previous 2 weeks. On January 2nd, Sunny Day was paid for the pay period beginning 12/5 and ending 12/18. 2 weeks later, on January 15th, he was paid for the next pay period, December 19th through January 1st. As I move through the pay periods, notice that there is no gap between the pay period end date of one paycheck and the pay period begin date of the next. It's the very next day. There shouldn't be gaps in the pay periods. So as I look down the list, I can see that the last paycheck they received was on 3/25 and the pay period was through 3/11. That means my next pay period is going to be 3/12 through 3/25, the March ending pay period. I can't do my OPRS report and payment until the next wages are paid, and that payday is April 8th. So the wages and overtime summary will help you investigate the pay periods already posted and determine what the next pay period should be. So wrapping up Chapter 1, we have verified the employee setup is accurate. I have checked all of the pay rates against our local legislation. I've checked the withholdings, making sure that if I see any fringe benefits or salary reduction, that I have verified that those agreements are in place. There is legislation to back it up, and my state retirement, OPERS or Ohio Police and Fire Pension Fund, has those agreements. So make sure that's correct. You're also checking items like the local tax rates, the school tax rates, and the withholding amounts for the employee's share of health or other benefits. Make sure these items are accurate based on your local legislation and policies. And now we move to Chapter 2, your first month survival guide. So once you're armed with the information that I know what withholdings were paid last, what tax liability or OPERS and OP&F liability period those were for, and what is due at this time, you can tell whether you have payments to make. In our case, we found that the March and first quarter taxes are due. So I'm going to show you how to make those payments. We're on page 9, how to pay withholdings. The steps to access are payroll, transactions, withholding payments. And notice that my batch list is empty. Nothing has been started. So I'm going to click the Add button and make my selections. So as I spoke of earlier, when you look at withholdings, they are grouped into two separate categories. Regular would be all taxes and other withholdings that have nothing to do with state retirement. Those are all based on a liability date associated with the employee's check date, and then state retirement based on the pay period end date. So you'll see these two groups. Our withholding payments are going to be the regular type. The next selection you make is it going to be warrant or electronic? Warrant means that you're going to write a check and send it in the mail. Electronic means you are paying online and will print a paper voucher from the UAN software to document that online payment. Manual is that rare occurrence where you would handwrite a withholding payment. Our exercise begins on page 11, monthly withholding paid online. I have 3 electronic payments to enter: federal, state, and school taxes. So I'm going to choose regular, electronic, and the Add Withholding Payment form opens. The first thing we need to decide is what will be the post date. This means the date that I'm going to make the online payment. Please be aware whether you have permission to make payments between meetings, and make sure your board understands the deadlines that you have to pay taxes so that they're not paid late and incur late penalties. Our post date, we have permission in Buckeye Township to always pay withholdings when they are due. I don't have to wait for a meeting. And for electronic, it simply means that I go online and make the payment. So my post date is going to be my today date, April 4th. Remember, it's April 4th in payroll training land. From the drop-down list, I'm going to choose the payee. Our first payee is the U.S. Treasury. Notice that my U.S. Treasury is my federal tax payee. You might not see U.S. Treasury. You could see the IRS, Internal Revenue Service, EFTPS, which is the Electronic Federal Tax Payment System online, and you might even see the bank name. I think you'll want to look for the description. Federal in all caps will be the clue. I'll mark the U.S. Treasury and note that the software is going to automatically default to the oldest unpaid withholding. And in my case, the year is 2016 because the previous fiscal officer kept the withholdings paid current. Notice also it defaults to the oldest unpaid month. And because all the other months were paid, March is the only one that appears. Your system might not be this clean. It might be defaulting back to prior years. That means you have other things that we'll need to clean up, but you're going to want to click on the year and choose the current year, and then click on the month and choose either the month or click on quarter to choose the quarter that you're paying. You are driving the software. It's not forcing you to do something with the old. It's simply showing you you've got an old problem that needs to be taken care of. So I'm going to pay the March 2016 federal tax payment. I'm going to select all the wages. Why would I leave somebody off that tax payment? You see that there are gray tabs. It's simply informative. The employee accounts tab, these are all the accounts that the employee share will be paid from. The employer accounts tab shows me all of the accounts the employer share will be paid from. And the additional tab has a purpose box. I can type something in, but it's not necessary. And on the right, I can see that it breaks down the employee and employer share and the total. This total is the amount that I'm going to pay online. If I'm going to make multiple payments, I'm going to click Remember Date until form closes and click Save. The software shows a confirmation in the bottom left corner that it's saved, and I can make my selection for the next payment, the Ohio Department of Taxation. And again, your entity may not say Ohio Department of Taxation. It might say State Department of Taxation. It might say Treasurer of State, and it might say State Tax Payee. I'm going to select that. Again, it's going to default to the oldest unpaid. Remember, my withholding summary unpaid showed that I didn't have any old problems to deal with. So this is defaulting to the month that I want. Again, if your entity defaults back to a prior year, you're going to change that to 2016 at this time and guide the software to the payment you wish to make at this time to keep your payments current. I'm going to select all of my employees from the list. Why would I leave somebody out of the state tax payment? Again, the Employee Accounts tab shows me all of the account codes that will be posted to this payment. The Employer Accounts tab is grayed out because the state withholding doesn't have an employer account. And my additional tab simply shows me the total. I click Save and choose the last in our group, the Ohio School District Income Tax. You may not see that as well. We're again going to drive this to make sure it's the right month or quarter that we're paying. 2016 in March is accurate in our case. I'm going to select all of the wages. And again, the Employee Accounts tab shows me where this payment is going to be posted. And the additional tab simply shows me the summary of the payment. I click Save. In the bottom left corner, I get my confirmation, and that is the last electronic payment I'm going to make. So I'm going to close this form. I see my 3 electronic payments in the batch. Although I'm not ready to make the payment, I am ready to post these vouchers. Once I have the supporting documentation printed, I'll go online and make the payments. So we're going to go ahead and select all and click Post Print, posting 3 selected items. If you want to print multiple copies of your payroll vouchers, you can change the number of copies in this area. I always want a copy to go with my payments, so my payments file is complete, and I want another copy to go in my withholding file. I'm going to print, and the software asks if all items printed successfully. I click Yes, and we're ready to proceed. On page 12, we see the monthly withholdings paid by warrant and the quarterly withholdings paid by warrant. I'll do these types at the same time. We're going to click the Add button, and again, it's regular, but I need a check. We mail a check for these items. My post date is still going to be today's date. In your case, you may be posting these for the meeting date where they'll be approved, signed, and then mailed out after that. Our payee from the drop-down list for the first item is the Buckeye Village Income Tax. We pay this monthly. My software defaults to the current year and March, which is exactly what I want. So we're going to select all the wages. The Employee Accounts tab shows me the appropriation accounts this is going to post to, and the additional tab shows me the summary. We click Save. And my next payment, I forgot to click Remember Date until form closes, so I'm going to select that again. And my next payee, if you look in the book, I am paying the Little Village Income Tax, and I want to bring this to your attention. If I look at my drop-down list, I don't see Little Village Income Tax, but I know it's an unpaid withholding. So what does that mean? It means probably one of these vendors is set up to pay the Buckeye Village Income Tax. Well, it's not going to be the dental insurance or the Great Insurance Company. It's probably Regional Income Tax Agency, but I don't want to guess. I'm going to minimize this form and look at my withholdings. If I go to payroll, maintenance, and withholdings, I can find my Little Village income tax, and when I look to the right under the payee, I can confirm that this is paid to the Regional Income Tax Agency. So the Little Village Income Tax Department works with the Regional Income Tax Agency to collect their taxes. I'm going to go ahead and close the withholdings form and go back to the taskbar and bring up my add withholding form, and now I can confidently choose Regional Income Tax Agency knowing that this is going to pay the right withholdings. Notice that the software has defaulted me to the correct year, but the month is January. Remember, the Little Village income tax is paid quarterly, so the software has defaulted me back to the oldest unpaid. This isn't a problem, and we sometimes will get a call from an entity that says, why does UAN make me pay my quarterly withholdings every month? The software is not making you do that. The software is showing you your oldest unpaid. You are driving the software. I'm going to move it to the quarter, and it will automatically default to the first quarter. I pay quarterly. I'm going to tell the software to make a quarterly payment. Now I can select all the payments in the list. Notice that those paychecks are dated in January, February, and March. It's my first quarter payment. The total amount is again at the top, and I can see that on the additional tab as well. I click Save and Close. Now I can see both of my payments in the batch list. I want to go ahead and post these payments. These are warrants, and click Post Print. Posting 2 selected items. Keep in mind that if I'm sending a check, I will probably be completing a form to go with it. My next check number is 3572. I click OK and send that off to my printer. I'm going to load these 2 exact checks in my printer and send them off. Did all items print successfully? I always look and make sure they're okay, and I click Yes. That's posting my withholding payments. You always need to know if you are ready to pay the state retirement. In this case, we're not. We already looked at the payroll reports and statements, wage reports. And the wages and overtime summary. I'm going to go ahead and choose one monthly and one biweekly employee, and I can see that the last paycheck posted for Brutus was February's pay period. That means I still have the elected officials to pay in March. And again, with the biweekly employee, my last check was dated 3/25, but the pay period ended 3/11. My next pay period will be 3/12 through 3/25. I can't pay or do the state retirement reports until the last wages with the pay period ending date in March have been posted. So again, you always check that. The next section deals with how do I pay benefits when some comes from payroll and some comes from accounting. So an example of this would be the health insurance. If your employees withhold a portion of their health insurance, that's paid from the payroll side, and the accounting side pays the employer's share to make up the full amount. There are multiple ways to do this. The first is to post and send 2 checks in the mail. If you send checks, easy to post the payroll withholding for what you've collected from the employees, and then go to accounting and create from your purchase order the balance of the invoice due from accounting. The 2 checks together make up the balance due, and you send those 2 checks. If you pay online, you simply use vouchers. There will be one online payment. In UAN, there will be a payroll voucher for the employee withholdings, and then in accounting, you create an electronic payment for the balance of the invoice coming off the purchase order. There is also a way to combine the 2 items. You can collect the unpaid withholdings from payroll and send it to accounting so that you can add the employer's share to it from the purchase orders. Now, we highly recommend that new fiscal officers simply use the 2 payment method. You are going to pay 1 payment to the vendor, but you'll either produce 2 checks or 2 electronic payments for 1 online payment. It's going to be easiest for you while you learn so many things at once. Once you get your feet wet and you're more comfortable in the software, you can tackle the unpaid withholding clear process. I'm going to demonstrate this process so that you understand what we've got. We have unpaid withholdings for health and dental that was collected in the month of March, and it's time to pay the next monthly invoice. As a matter of fact, on April 4th, it's probably almost past due. So it will be important for you to make sure you're making these payments in a timely manner so that the insurance benefits are paid on time. We're going to go to payroll and utilities and unpaid withholding clear. We received the message that unpaid withholdings should only be cleared if they will be paid or have been paid in accounting, transactions, and payments. When you use this utility, if you use it improperly, you're going to make a mess of your withholdings. We always put the cautions where clients have misused an item. You want to be very careful. In this case, this is exactly what I want to do, and I click OK. It is always recommended that you display the report and print it. It's your fallback. So we're going to click Yes, and the software will take us to the withholding detail report. The report form is going to default to the latest unpaid withholdings rather than the earliest unpaid withholdings. So you may need to change this date back to the month that you need. In my case, March is accurate. According to our exercise on page 15, I'm going to choose health insurance. And when I display that report, it shows me all of the account codes and the amount that make up the total payment that is going to be paid from the account codes and payroll. This is important. You're going to want to print this for your records. So always click print, send that off to the printer, and keep that for your records. We're going to look at this number when we get to the utility and make sure we're clearing the correct amount. The unpaid withholding form is down here on our taskbar. I'm going to click that to bring it back up. And the form always defaults to the oldest unpaid. So if you have old unpaid withholdings, or even the earlier in a quarter unpaid withholdings, you would need to change this to the month that you want. In the frequencies box, I need to select both of my frequencies because both frequencies have health insurance. And over to the right, I am only going to choose health insurance. I select all the wages because that's what I'm clearing. And then I verify my amount, $1,129.27. That exactly matched the report that I just produced. If it didn't match, it means I have either used the wrong dates on the utility or I used the wrong dates on the report. I would want to stop the process and start again, making sure I was clearing the right items. My clear date is going to be today. And when I click Post, the software is asking me a question. Do you want to create a batch payment in accounting for the cleared withholdings? So if you look on page 13 in the center, method number 2 or 3 is clearing the unpaid withholdings from payroll, but number 3, we simply clear them and don't use them. So the question needs to be answered based on what you're going to do. If 100% of the payment is going to come from accounting off the purchase order, you would say no to this question. That's method number 3. We simply need to clear the unpaid withholdings. But if you're using method number 2, where you're going to combine the unpaid withholdings from payroll with the accounting purchase order, we need to say yes. We want to send this to accounting payments. When I answer yes, the software is going to ask me which type of payment should UAN create. And in my case, I'm creating a warrant. We mail them a check. In the lower left corner, I see the confirmation that it cleared the 1129.27 of unpaid withholdings. I close the form and close the reports. I'm now going to go to accounting, transactions, and payments. And my warrant for the great insurance company is in the batch. I mark it and click Edit when I'm ready to add the employer share. Since I have a purchase order to the great insurance company, I'm going to import the details so I don't have to type them individually. I'm going to choose the type, PO regular, and the great insurance company's PO. You have to know your purchase orders to make that selection. Now, my employer share is paid from all of these account codes. The software is showing me the unspent balance. I don't need that amount, but I need these account codes. So I'm going to take the detail and the distribution and import it into my payment. Now I'm going to edit the amount for only what I need to make up the employer share. So you would look at your monthly invoice, subtract the employee withholdings from payroll, the $1129.27. The difference is the amount you are paying from accounting, $11,005.79. The employee withholdings and the employer share make up the total $12,135.06 that I owe the insurance company. Now I'm over distributed. Let me open this up to full screen so you can see better. I'm over distributed because the purchase order import brought the unspent balance of each account code into the payment. I'm going to edit these amounts to what they should be. My 1,110 to 11 is 2641.39. 2021, 1870.98. 2041, 990.52. 2171, 1760.93, and finally 3741.97. Once I enter the last item, my payment is fully distributed. I'm ready to save and then close. You'll probably have some kind of cheat sheet that will show you how you're going to come up with how much is spent from each account code. When I'm ready to post the payment, I simply mark it and post. Posting one selected item, confirm the next check number, put the check number in the drawer, and click print. Yes, the check has printed successfully. And let me run through that process again with our example with dental insurance. Again, we're just trying to familiarize yourself with what the software will do. You may not want to tackle this at the beginning of your term. Payroll, utilities, unpaid withholding clear. You always receive the caution message. Since we are using the utility for its intended purpose, we can say OK. And yes, we want to display the report. The report is the withholding detail. It's defaulting to March, which is exactly what I want for the dental insurance. I display the report, check the amount, and print that for my records. And I'm looking to clear $216 of dental insurance from the employees. I can close the withholding reports. Down on my taskbar, I bring up the unpaid withholding clear form. And the date is going to default back to the oldest unpaid. You would have to drive it to where you need. It is March for our purposes, and I can select both of my frequencies and the dental insurance only. Selecting all of the wages in the list and confirm the amount is exactly matching my report. I'm going to give that a clear date of today. I'm going to have that check signed today, and I click post. Again, I have to answer the question, what method am I using? 2, where I'm going to create a batch payment in accounting that includes the payroll. That would be yes. If I was simply clearing the unpaid withholdings from payroll because 100% is going to be paid from the purchase order, I would say no. So I'm going to say yes. It asks me what type of payment. If I'm sending a check, I choose warrant. If you were paying online, you would choose electronic. The bottom left corner shows it cleared the unpaid withholdings, and I can close this form. And now go to accounting, transactions, and payments, and there is the batch payment to the Good Teeth Dental Insurance. I'm going to edit that payment when I'm ready to make it, and I'm going to import my purchase order. I know it's a PO regular, so I can shorten my list and choose the Good Teeth Dental. I want to bring in the detail and the appropriation accounts. I can check my unspent balance, making sure that that's sufficient, and click import. I'm going to open this up to full screen so you can see better. I'm going to edit the unit price of the employer share to exactly what's needed to complete the invoice. So I look at my monthly invoice. Subtract the $216 employee share, and the balance remaining is $305. My payment is now $521. That's accurate, and I'm going to distribute the purchase order at the bottom. So checking my account codes carefully, 1,110, 223, 7320, 2021, 5185, 2041, 2745, 2171, 4880, and 2191, 103.70. Keep in mind that your purchase order might not import them in the exact order. Please make sure you are editing the right accounts. I've distributed 100% of my $521 payment and can click Save and Close. When I'm ready to post the warrant, I click Post Print, confirm the next check number, and send this off to my printer once I load the check. I confirm that it's printed successfully, and that completes the process. We're now on page 18. How do I report taxes and miscellaneous withholdings? Well, the vouchers and the warrants that we posted in this last exercise may require some reports for you to make the payment online or fill out the form to go with the check. So let's take a look at these. I'm not going to cover the federal 941 first because it's not required to make a payment. Let's look at these withholding payments that will need some backup documentation. If you turn to page 20, the state and supplemental. Let's take a look at that. Payroll, reports and statements, tax reports, other. The Ohio tax report is the first on the list. If you pay quarterly, you would want to change that to quarter. If you pay monthly, you are going to show the month that you're paying. I'm going to display this report for you. You may want to print this and put it in your file with your voucher. It shows the gross wages paid, any non-cash benefits, and the total gross wages. It also shows wages not subject to tax. It's very important to understand what this means. This means $105.79 of what's included in the total gross wages is not subject to state tax. Some of the withholdings have a tax benefit. If you've already run through your withholdings and your employee setup, then you should understand what would give you the tax benefit. The wages subject to tax is the total amount of taxable wages for state tax purposes, and your payment voucher should match the $649.59. If you pay by mail, you'll probably have to complete a coupon with some of this information. If you pay online, you're going to complete the information on the Ohio Business Gateway. I would print this for my file. Our next report is the school district report, and it's very important to understand how school district tax reports are built. Notice that on the school district tax report, I have multiple school districts. You may only have one. Be careful when you set up school districts. Each school district should have their own withholding attached to one payee. I believe all school withholdings go to the Ohio School District income tax. So let me show you the withholding so that you understand what I mean. I'm going to go to payroll, maintenance, and withholdings, and I can see I have two school districts. They're two different schools. They have different tax rates. They have different school district numbers, and they might have a different tax base, state or income. They have to be set up individually, and I'll show you that. Both of the school districts have a payee as the Ohio School District income tax, but they're not the same school. The district number, the type of tax, and the rate of tax is individual to this school. Let me show you the second school. This is the West School District income tax. It has the same payee, the Ohio School District income tax, but it has a different district number and it may have a different tax base and a different rate. Schools must be set up individually for the W-2 and the school district tax reports to print accurately. When I posted the school district withholding, it showed me one amount payable to the Ohio School District income tax. But when I go online or I send the payment in the mail, I have to show how much was withheld for each individual school. So I'm going to need this report before I go online or make my payment by mail. I select the items and I'm going to click Display for Class. You will print for your files. So notice we have first the East School District income tax, and again we have the gross, the non-cash, the total of those two, any wages not subject to tax. You see that's 0. This is what I need, the total wages subject to tax and the tax withheld for the East School District. That's not the amount of my payment, it's the amount of the payment applied to the East School District. My second page is for the West School District. It has the exact same columns, the total wages subject to tax for the West School District and the tax withheld for the West School District. If I add the tax withheld for both of these for this period of time, it will match my voucher exactly. So when I go online to the Ohio Business Gateway, I have to have this report and the voucher in hand before I start the payment process. Our last tax report that you'll need to back up your payment is the local tax report. And in our case, we have 2 local taxes. But remember, Buckeye Village is a monthly report and Little Village is a quarterly. So I'm never going to select both of these items. I'm going to select Buckeye with a setting for March, and I would print that. It looks the same. We have gross wages, non-cash, and the total. The wages not subject to tax, these are tax benefit items, and the total wages subject to tax is less because of that tax benefit item, and the total tax withheld. So when you're using this report to complete your local tax report, remember Buckeye Village, we sent a warrant, so I probably have a report to fill out. I'm going to use this report and print a copy for my file. I now want to set the quarter and look at Little Village income tax. You would print this for your file. It's going to show me each month the total gross wages, the wages not subject to tax, the total wages subject to tax, and the tax withheld for the quarter. Complete your form and mail this with a check or complete it online and post your online payment. So don't be trying to make these payments online without the documentation you'll need from the tax reports forms. I'm going to drive the software back to Payroll and Reports, and we're going to look at withholding payment reports. On page 21, miscellaneous or garnishment. You're going to need to choose from the drop-down list, child support, garnishment, and miscellaneous, especially for child support if you send a check. I don't have an example of child support in here, but what I have are payments for garnishment. Garnishments often have to be paid after every wage posting. In our example at Buckeye Township, those payments had already been made and I had no outstanding garnishments. If you're paying child support and you're mailing a check, you're going to need this report, but you're going to choose on the Options tab to print the Social Security number when you are sending it with a check. And let me show you what that's going to look like. I don't have a child support example. We're going to use our petty court collections. When you choose the Social Security number, it's going to print this on the report. So for child support, if you have multiple employees, you want their Social Security numbers, case numbers, and order numbers to appear on this report and the exact amount withheld for each. You would send this with a check so that the Child Support Enforcement Agency knows how much to apply to each case, and the child support goes to the right people. If you're not sending this out in the mail, you probably will not need the Social Security number. If you're paying online, you would need to know how much exactly each person is being paid, but you only need to mark the payment. You don't need the Social Security numbers unless you need to complete those online. And your internal report should look like this. So make sure that you are producing these reports as needed. Most garnishments will come with their own forms that you have to complete. You may not need this report. Now we're going to flip back to page 18, the federal report. Well, at the end of the quarter, not associated with your payment, you always make your payment on schedule, exactly like you're supposed to make your payments, but at the end of the quarter, you have to file the 941 quarterly report. Let's go get that. We're going to go to external forms. Notice that external forms has the arrows beside it, meaning if you click on that item, it's going to expand with more items. So let's choose the 941 Federal Quarterly. The report has not already been added, so I need to click the Add button and choose my quarter. In our training data, it's the first quarter. The software will generate the report from all posted wages and posted payments and opens up to the Taxes tab. I'm going to open this up to full screen so you can see better. The Taxes tab generates all information from the posted wages. You should not have to edit this tab, only if you've made mistakes and had to make corrections. The software is generating it exactly to the IRS instructions for a quarterly 941. The blue question marks down the right side are there because this is where people ask a lot of questions. If you need to understand where the software is pulling data from, you would click on the blue question mark and it explains to you why it's pulling data in. This box does not mean how many employees were paid in the first quarter. It has nothing to do with that. Read the question. Number of employees who received wages, tips, or other compensation for the period including March 12th for quarter one. Well, in our case, nobody has received wages for the pay period including March 12th because our next pay period is going to be March 12th through the 25th for the biweekly, and the elected officials will be March 1st through March 31st, but they haven't been paid yet. So in the IRS instructions, it says if no one has been paid with that date, put a 1 in the box. It's the IRS. So the software is completing this form exactly based on truly posted wages. Please do not edit this with the number of employees you had in the quarter. It has nothing to do with that. The taxable wages, tips, and other compensation is based on the total gross wages subject to federal tax. You don't edit this number. The UAN software, when it posts wages, keeps track of this number. There would be no reason to edit this. The same with the Social Security taxable amounts and the Medicare taxable amounts. The Medicare amount may not be the same as the federal tax amount simply because you have withholdings that have a tax benefit. Some people still have employees that are exempt from Medicare, although a lot of those have retired in the last few years. Remember, you can't be Medicare exempt unless you have held the same position since before March 31st, 1986. You may still have one or two. The software is also calculating the total federal and supplemental tax withheld. It's adding these items together for a total. And if there's a fractions of cents, the software will show you the fractions of cents. Remember, the fractions of cents comes from the difference. On the quarterly 941, you are taking the full quarter's Social Security wages and multiplying it by the combined employee and employer rate. Because you are multiplying that by a quarter and both employee and employer share, there can be a rounding difference from what was exactly withheld. The same with Medicare. When you're calculating the total quarter by the total employee and employer share of Medicare, there can be a rounding difference in the total amount. The IRS wants you to include the rounding difference in this box, and the software will do that for you. You shouldn't have to edit that number. It means that there was a fractions of cents when calculating it on the total quarter by the total rate, as opposed to wages posted individually throughout the quarter. The IRS wants your fractions of cents to be included. The software does it for you. The total taxes on line 10 will be accurate based on the total wages posted. You should not have to edit these numbers. On the Payments tab, the software can see all of your posted payments. In our case, we're showing online payments made through the EFTPS website. We have vouchers posted for each of those payments. You always make your payments before coming to the 941. Notice that one of the payments is not automatically selected. You should not select all payments automatically. The software can see that the January 4th posted withholding payment to the U.S. Treasury has nothing to do with the first quarter of 2016. This represented the fourth quarter of 2015. The payment was made on January 4th, and the software can see it has nothing to do with the payments that are automatically selected. When I look at the Balance tab, I can see that the total deposits for quarter match my total taxes, and that means I have paid the accurate amount. If you have not paid the accurate amount, your Balance tab will show a balance due or an overpayment. You would need to understand why that has happened before you complete this form. The Liability tab needs to be marked for your type of payment. If you are line 10 and the return is less than $2,500, you would select the first item. If you're a semi-weekly scheduled depositor, you would select the second item, and you must complete IRS Schedule B to go with your 941. We'll discuss that in a moment. If you're a monthly scheduled depositor, this box is checked, and the software automatically shows your 3 months liability. You should not change this. This matches exactly the liability date of employee paychecks and should be left as the software has generated it. The total liability for the quarter matches line 10 of the Taxes tab. When you've completed the form, you click Save, and the software shows in the bottom left corner that it's saved, and we close. It's in my batch. I need to do something with this. This report needs to be printed, signed, dated, and mailed to the IRS. Please be sure that you make a copy of the signed report for your file. This report in UAN will remain in the batch, but it does not necessarily represent what was mailed to the IRS. You need to keep your file copy for audit so they can see exactly what was filed with the IRS. If you mail a check to the IRS because you're so small that they let you do that, be sure that you understand what you're allowed to do. I'm going to edit this and show what that would look like. If you make one quarterly payment for your taxes, on the Payments tab, you're going to see that automatically check marked, and that means you've already made the payment. You have not made the payment if you're mailing it with the report. Uncheck the warrant. Your Balance tab should show a balance due that exactly matches the check that you're mailing. So when you send a check with the 941, it needs to show a balance due, and you'll need to make sure that your Payments tab has nothing selected. We'll click Close. I'm not going to save that. Those of you that are a semi-weekly depositor for federal tax purposes will need to prepare the 941 Schedule B to accompany your 941 quarterly report. Let me show you where to obtain that information. We're going to close the External Forms menu and go to Tax Reports Federal. From the drop-down list, choose 941 Schedule B. And it's going to default to the first quarter in my case. You may have to change your selection to get the right quarter. Notice that all of the employees are automatically selected. I can't change that. I'm going to print that for my internal file. Let me show you what that will look like. It's going to print with the Do Not File for internal use right across the middle. The IRS will not accept this form. You need to go to the irs.gov website, search for their 941 Schedule B. They have a very nice PDF form fill-in that you can save to your hard drive and then use each quarter. This report gives you the information to use to complete the IRS form. You'll enter each payday and the total tax liability for that date. You'll total each month and then total the quarter. The total for the quarter must match your taxes on the 941 quarterly report. So complete that irs.gov form fill-in, save it, print it, and mail it with your 941 quarterly report. That completes the section on the Federal Quarterly 941. And we'll move on to our Ohio Department of Job and Family Services report. The information how to report unemployment eligibility, the ODJFS wage detail, begins on page 21 and continues through page 23. We're going to go to Payroll and Reports, where we are, External Forms, and ODJFS wage detail. I'm going to click the Add button and choose First Quarter. The ODJFS wage detail report generates from the truly posted wages during the quarter. I'm going to open this up to full screen so you can see. In the upper area, we find all of the employees, their social security numbers, their quarterly wages, the taxable amount of those quarterly wages, the time, whether they are full-time or part-time, the number of weeks worked, and the months they have worked. Let me click on the time heading. Remember that when you click on a heading, it sorts the items below. If I click on time, it sorts all of the full-time together and the part-time together. I only have one part-time employee. What you'll need to do is evaluate this information. The full-time employees automatically default with 13 weeks and all 3 months checked. And this would be accurate if the full-time employees worked the entire quarter. Sometimes you have a brand new employee who has come in the middle of the quarter, or an employee who quit before the end of the quarter. In our case, Steve Friendly was a full-time employee, but he quit at the end of February. I need to change his weeks worked and uncheck the month he did not work. So even when you have full-time employees, sometimes a departing or a new employee is going to require edits to your full-time list. Another thing you want to check are your elected officials, and you wouldn't know this from the list. My elected officials, Sherry Trustee, should not be on this list. Elected officials are never entitled to unemployment if they don't get reelected. So Sherry Trustee does not belong on this report. She was elected, and I'm going to check that box to remove her. So notice that the list is defaulting to only the selected items. When I unselected her box, it moved her to the unselected list. If I looked at all items, I can see her unchecked box. Selected is what's going to appear on the report. So if you see elected officials on your ODJFS report, you need to uncheck their boxes, and then you need to edit the employees and payroll maintenance employees and correct their earnings setup so they no longer appear on this report. Now let's take a look at our part-time employee. Art Part is a part-time employee. When you mark an employee part-time in the UAN software, they default to the ODJFS report with 0 weeks worked and no boxes checked. Some of you will have part-time employees that work every single week. You would simply type in the 13 and all 3 boxes. But if your part-time employees do not work every single week, you're going to have to look at their time cards for the period to determine the number of weeks worked and which months they worked. So I'm going to uncheck the months that Art Part did not work. He comes in and helps with the mowing at the cemeteries. He does not work every single week. He works when we're short-handed. So he did not work in the first or the second month, and he has only worked 4 weeks altogether in the first quarter. So your part-time employees have to be evaluated and manually entered. It's very important that they receive the proper credit for unemployment. You shouldn't be overstating or understating their weeks worked or the months they worked. Some of you that have a large number of part-time employees will probably keep a spreadsheet and fill out the weeks worked and the months as you move forward in the quarter. So when it's time to do the ODJFS report, you look at your spreadsheet and you've already got the number of weeks calculated. If you only have 1 or 2 employees, you will probably just look at them individually. One more item to look at in the upper portion is the quarterly wages compared to the taxable wages. I'm going to sort these items by quarterly wages so that you can see the people that make the least amount of money all the way to the most. Notice these last 3 employees made over $9,000. This employee made $10,360, $10,934, and $14,484. But their taxable wages are only $9,000. That is accurate. $9,000 is 100% of what you report as taxable for each employee during the year. The UAN software is keeping track of that for you and will automatically reduce the taxable amount based on current wages paid. So these 3 employees that make more money than the others have already hit in the first quarter the full taxable amount. The rest of the year, they will have 0 taxable wages, even though they report quarterly wages, and that is accurate. Notice that these that are closest to the 9,000 will probably meet their 9,000 in the second quarter, and then it will stop reporting a taxable amount. You should not override the taxable amount with the full amount of wages. It's not accurate. If you have questions about this, notice that you can click here and receive a little more information, or you can contact the Ohio Department of Job and Family Services for more information. Once the top portion is completed, you're going to look down here at the bottom left corner. The software needs you to choose your type of employer. You are either reimbursing, meaning you do not make a payment when you report, or contributing, and you must make a payment when you report. If you're contributing, you must fill out the rate. UAN does not know which type of employer your entities are. We need you to contact the Ohio Department of Job and Family Services and ask that question. In our example, we are a reimbursing employer, so I'm going to mark reimbursing. I want you to note down here, no employees and no wages this quarter. For those small entities that only have elected officials during the winter months, and then you hire part-timers during the summer months, you still have to file the quarterly report in the months where you had no employees, only elected officials. You must mark it with no employees and no wages this quarter and file the report that way. That wouldn't be accurate for our setting here. So this setting applies to our smaller entities that only have employees in the summer. When we're finished, we click Save. And in the bottom left corner, it shows that it saved the report, and I close. I'm going to mark this report, but how I file is going to be between me and the Ohio Department of Job and Family Services. If they mailed you their form and you've completed your UAN form accurately, you can place that in your printer and click Print. It will fill out the form and you'll be able to mail that in. You probably want to print that to paper and hold it up and make sure that's going to line up correctly first. Make sure it's coming from the right tray. If you are filing electronically, meaning you upload the electronic file to the website, you're going to click File. The software shows you that it created the file uiwage.txt and it saved it in the CUANE files folder. Let me show you that. We'll click OK. When you're filing online, you're going to want to print an internal copy for your files. In that case, I would click Display. We're getting the warning message that the information does not match. Remember that we removed an elected official from the report. We'll click OK, and then I print from here. The display shows all of the headings, where print will simply print the information on the form. So you print from here for an internal copy, and then close. If you're uploading the report to the website, you're going to go to the website, log in, and when you click Browse, you are going to direct their website to your computer. You must choose your local disk, and you'll see the UAN e-files folder. Double click, choose the UI wage file, and upload that report. When you're finished uploading, you want to delete the report from your UAN e-files folder. It contains secure information. This is not encrypted or you wouldn't be able to upload it. Once you upload to the website, Print your confirmation and put it in the file with your internal copy. If you go to the Ohio Business Gateway and manually complete the form fill-in, you would use your internal copy to complete that information. Always print the confirmation and a copy of the report that you manually produced online so that you make sure you put it in your file and it exactly matches the internal report that you printed. That completes our Ohio Department of Job and Family Services quarterly ODJFS wage detail. This completes our section on withholding reports. We're ready to move to employees. Before we do that, I want to cover the basics of the payroll structure. Because you're newly appointed, the structure is already in place, and you need to understand that. This section is not in the book, but it will come before the next section on page 23, entitled Employees. So let's look at the payroll structure. We're going to go to payroll and maintenance. We maintain the payroll in this area, and I'm going to go down the left side. The additional information fields are entity driven. If you see nothing on this form, remember you're looking at the active items by default. You can click inactive to see if there is anything there. If you have nothing, nothing has ever been created. If you see items in this list that are active, it means this is what they track for employees. I'm going to close that form and we'll go to earnings and leave. On the earnings and leave field, you see the active earnings that are pulled in for employees. So when you add a new employee or edit an employee, these earnings are the only ones that you would be able to use. If you have a new earning that's required, you would add it to the list using the Add button. The items with the even thousand type number were defaulted by UAN. Everything with a number above 1,000 is an entity added item. So we have the regular overtime wages defaulted at 1.5. And in our entity, Fake Buckeye Township, we used to have an emergency call overtime. So if the guys were called out at 3 o'clock in the morning to get a tree out of the road, they would get double time. So if your entity has special overtime rates, you would add a new overtime with that particular rate. And you would name it specifically like your policy names it. Notice that we have each of the leaves set up as if it were added for a brand new employee. Keep in mind that the vacation leave of a brand new employee might be at a lower accrual rate than one that has been there for 15 or 20 years. I still only have one vacation leave, and it is set up for a brand new employee's accrual rate. When the employees that have been there longer move up to the next accrual rate, I edit the employee's leave, not the main leave that we pull from. I want to take a look at the rare items: tax item, non-tax item, and non-tax non-retirement. I want you to understand that these are tax terms, and non-retirement means state retirement. It's not necessarily what you think it is from the description. The non-tax item and the non-taxable non-retirement item are taxable for some purposes. Let me show you those. Notice that it's taxable for local tax, OPERS, OP&F, Medicare, and Social Security. So the word non-tax item doesn't mean what you think it means. This is a tax word. It means something particular. You would be careful setting something up with this setting. The payroll prerequisite videos cover these rare items in detail. You want to be sure and watch those. The non-retirement items, notice these non-retirement items usually refer to the payout of leave when it's not pensionable. There are items that state retirement, OPERS or OP&F, consider not pensionable. Even though you pay them, they're taxable, they're not pensionable, and you wouldn't want them to appear on the OPERS report. You would use a non-retirement earning for these. The non-cash benefit means that a person has the use of something that is taxable according to the IRS. It may be paid over in accounting, or they have a use of a vehicle, and part of that use is taxable, and it has to be brought into payroll as a non-cash benefit. I want you to be very careful with the healthcare reimbursements. Anything that you see with healthcare reimbursements. Healthcare reimbursements were changed through the Affordable Care Act. Almost every instance, they would no longer be allowed. You should deactivate those items. Check with your tax professional if they are still being paid. There are stiff penalties for paying those items. So this is the list that you pull from for earnings, and this is where the default comes for the settings for a brand new employee. EFT prenotes, EFT setup, and the email editor are all associated with the direct deposit of wages. If you have direct deposit of wages, you would be using these items. The employees form is where your active employees are listed, and this is where you would edit their employee setup if a change has taken place. Notice the active pay status at the top is the default. It's only showing me the list of active employees. If I have seasonal workers that have been laid off in the fall and are coming back in the spring, I would want to look at my inactive list to see if they are already there. Your inactive list just means that they are not currently actively being paid. They may be paid later, and you would activate them for that process to take place. And we have an example of that. So this is where we maintain the employee setup. We'll come back to that. The frequencies, every entity has the default frequencies from UAN. When the software was initially set up, the first pay period was set up, and nobody ever touches these again. I doubt that you'll need to edit these items. The skip calendar editor is associated with withholdings. The skip calendar is usually associated with biweekly employees that have an item like health insurance withheld. Biweekly employees receive 26 paychecks a year, but health insurance is sometimes withheld at a 50% rate of the month's cost for the employee. That means in the months where they receive 3 paychecks, they would want to skip one. Some people take advantage of the UAN software and set up a skip calendar for the whole year and apply all of the employees to each withholding. Other people manually edit the employee setup. So you need to understand what the skip calendar is. If you look at your skip calendar editor and you only see deduct from every pay period, it means that your entity, they have not set up a skip calendar for everybody to be applied to. It doesn't mean they haven't set up skip deductions on the individual employees. It simply means they haven't set up a calendar to apply. Let me show you a report that you can print to see if anybody is using skip deductions. If you go to Payroll and Reports and Employee Reports, from the drop-down list, choose Employee Skip Withholding. If you see no data to report, it means nobody is using skip deductions. If you see a list like you have here, but you see nothing but deduct from every pay period, it means that nobody set up a calendar to apply to all employees. I'm going to go ahead and close that employee reports and bring us back to maintenance, payroll maintenance. Let me show you the skip calendar that can be applied to everybody. I'm going to edit the calendar. The first thing I want to draw your attention to is the name. They're going to be named so that you understand what you're doing. This is a skip the third pay period in a month. So when our biweekly employees have 3 paychecks in a month, I'm going to skip that third pay period. So be sure and name them so that you know exactly what they are. Now this skip third pay period can be applied to multiple withholdings. If I always skip the third pay period, I want one skip calendar to be applied to my health, my dental, my vision, everything that's going to be skipped to this same calendar. So in our example, Acme Healthcare 24 biweekly deductions would be great if you only had one deduction for a skip calendar. When you have multiple, name it so you can tell what's being skipped and then apply multiple withholdings to it. Now notice the blue question mark. Let's click that. You have to specify the skip deductions by pay period, not by pay date. So to skip a deduction, you would check. So make sure that you are selecting the right date, and only one day in the pay period that's going to be skipped will be marked. Our dates really don't coincide with anything. We simply have a skip deduction calendar set up for an example. Once you set up the calendar in January, you would save and close. And then when you want to apply that to the employees at the beginning of the year, you're going to choose the biweekly frequency and choose the withholding and select everybody whose calendar you want to match. We're going to click Save. And then I'm going to apply the health insurance. So this is a lot easier than editing every single employee at the beginning of each year and each of their skip withholdings. So at your entity, they may not have set up a skip calendar. They may still be doing it on an individual basis. You're going to want to get that set up so in January of next year, you'll be able to apply all of the skip deductions to one calendar. Well, let's keep moving down the list. Our withholdings are the list of active withholdings that can be brought into an employee setup. The items at the top of the list from ODJFS and up are all UAN defaulted withholdings. These were in the software when your entity first got the UAN computer. The payees are automatically tied to the payees in general maintenance vendor payees available in payroll. This list was created from our withholdings that are required for our employees. We have 2 different local taxes, 2 different school taxes, deferred compensation, dental insurance, employee withholdings, and I'll go over that in a minute, and health insurance. Anytime you have a new employee and they have a new withholding, what if somebody lives in another village and that has an income tax? You would have to add that village. If somebody receives a garnishment or child support court order, you would have to add those items. Normally, child support is paid to one vendor in the state, the Ohio Child Support Enforcement Agency. As long as you've added them as a vendor, everybody's child support could pull from one withholding. They would be set up individually on the employees. So I already showed you a little bit about school districts. They have to be individual school districts with the right information on them. And the same with the Buckeye and Little Village. These are different villages. They have different taxes. If somebody moved into another village that regional income tax agency managed, I would name the withholding, the name of the village income tax, like in this case, Little Village. If we had Anytown income tax, I would add Anytown income tax as a local tax and use regional income tax agency as the payee. In that case, one payment for both entities would be sent to regional income tax agency and you would complete the tax forms for the individual entities. Make sure you always have the individual withholding set up. Now notice that my dental and health insurance do not reflect the name of the company. And that's a very good idea because if I name my dental insurance Good Teeth Dental, then when we changed insurance companies, and that often happens on the annual renewal, you go with a different company, I have a lot of work to do because I would have to deactivate my Good Teeth Dental insurance, add a new one, and add that new one to each employee one at a time. That's a lot of work. But if I name it dental insurance, when the payee changes, let me show you what we would simply do. We would click Edit, and from the drop-down list, choose our new payee, and everybody would be updated at once. So you want to make sure that your health, your dental, your vision is set up with the name of a withholding, not the vendor name. The vendor names often change at contract renewals. You won't be able to change the name of a withholding until the year end. When you open temp mode, you're given the opportunity once a year to change your withholding name. So if your current withholdings are named by the companies instead of by a name of what the withholding represents, at the end of year you can change that. The payee would remain the same. The employee withholdings is one of our garnishments. One of our class participants shared with us the information that you are not permitted to name a withholding so that it would embarrass an employee if they have to show their pay stub. So use something vague so that you don't embarrass your employees. You can't put court-ordered garnishment as the name of the withholding. This may mean if you've got 12 different garnishments going to 12 different payees, you would have to name them something like employee withholding 1, employee withholding 2, and be very careful that you are associating them with the correct payee. But be sure that the name will not embarrass them. Okay, that's our list of withholdings. and I'm going to show you the withholdings editor. The withholdings editor is a way to update everybody to the same rate at one time. So from the drop-down list, I could choose Buckeye Village income tax, and if in November they vote in a new tax and it's 1.5%, in January of the next year, when I open up temp mode and log into the new year, I can change the new year rate by marking the rate and putting in 1.5. And it would save everybody at once, saving you a lot of time. We have an exercise to show you that later. I'm not going to save any changes. When the rate changes on an item like that, you would always edit the withholding. If Buckeye Village income tax changed in January, the first thing you would do is edit the withholding and change the rate to 1.5 here, saving and closing, and then, not saving, go to the withholdings editor and update everybody. This list must be updated first so that when you pull this into a new employee, it always has the current tax rate. So don't neglect this. Okay, so that's our structure for payroll. Now we're ready to start the employees. We're on the bottom of page 23, and we're going to go to payroll, maintenance, employees. Our example is how to reactivate a seasonal employee. So in Buckeye Township, it is April, and we're ready to hire our seasonal road or cemetery workers. And you may not be aware of whether these employees have ever worked for the entity before. So you should always look at the inactive list. And if we look at this in our example, Jerry Jones is our employee that is returning to seasonal work, and he is on the list. He was hired back in 2008. He keeps coming back every year. So I'm going to activate him by clicking the Activate button. And then I go back to my active list, and we have to check the setup. So I'm going to look at Jerry Jones by clicking Edit. And I recommend you use Advanced. Let me show you Guided. Guided means that you can edit an existing item, but you would have to choose exactly which item it is. In this case, we really need to look at everything in the setup. Choosing an item is just wasting my time. Sometimes you're only going to go to one place and you might want to use guided, but I think that you will always want to use the advanced option, save yourself some time. So we're going to go to Jones, Edit, and Advanced. This is the Edit Employee form, and it's very important that you see the symbol in the upper right corner. This symbol will help you know what form you're on. Notice the gray tabs across the middle. Additional information. Remember I showed you the additional information fields. Our earnings, overtimes, non-cash, leaves, and withholdings. These are the items that are listed for the employee. The list of withholdings may not be attached to all of the earnings. We would have to edit them to see what their attachments are. Remember that the Employee General Information Report showed you which withholdings were attached to each earning. But on this list, looking, I can see what's activated, but I can't see what's attached. So I'm going to look at Jerry Jones. He's filled in a new W-4 and an IT-4, and I'm going to check those to make sure they're accurate. Has he moved, or has the taxes in Buckeye Village changed since he was last an employee? So I'm going to check his address against his new forms. Those are accurate. He has not changed his marital status or his deductions. That can often change in a year's time. His OPERS member date would remain the same. His hire date would probably remain the same. We want to see how long he has been hired. Make sure that if this person was EFT last year, that you have the correct bank account information for the current year. You don't want to start sending money to a bank account that no longer exists. So review the information tab, make sure everything is accurate, and check your additional information tab. If you have these items listed, you would want to make sure you are keeping track of things. On the earnings tab, we can see that his hourly rate as of last year was $8.25, and he only worked in the cemetery. When I look at my local legislation, I can see that he is entitled to a raise. So I'm going to edit the earning to increase his hourly rate. Make sure you always check your legislation. And his new pay rate is $8.30 an hour. Make sure you check this typical hours. Notice that we have a 10 in there from last year. Maybe he was hired last year on a limited basis. If that is not accurate this year, delete that out. He is not going to be held to 10 hours per pay period. So there are some items you may need to change. Notice that when we're editing the earning, the dollar sign is in the upper right corner. I haven't left the edit employee form. I have simply opened up an item on top of. I'm editing the earning listed on the earnings tab. And when I save and close this form, I'll be back on the edit employee form with the little man in the corner. I'm going to look at the attachments. His position hasn't changed. He's still an hourly wages paid bi-weekly. I need to see if his withholdings have changed. And I can see that he lives in Buckeye Village. And since he was here last, remember he was laid off last August. Since he was laid off in November, they voted in a Buckeye Village income tax. And it's not attached to his withholding list. I'm going to have to take care of that. But I can't do that here. I'll have to take care of that in the edit withholdings area. I'm going to look at the accounts. He is still only going to be working in the cemetery. So I can go ahead and save my changes. In the bottom left corner, it confirms it's saved, and I can close. I see the new rate, and I'm going to go to the withholdings tab. If I look at my inactive list, I don't have a Buckeye Village income tax. It was actually voted in after he was laid off. I'm going to add the Buckeye Village income tax. Notice that it pulls in at the rate that is in effect right now, 1%. This is not associated with my earlier withholdings editor example. Our Buckeye Village income tax is 1%, and I have to attach it to the earnings. This is the most missed step when adding a new withholding. Withholdings are not automatically attached to every earning. You must make the attachments, and click Save. It shows it saved the Buckeye Village income tax. I can close my percent symbol, add employee withholding form, and back on the little man form, and I see Buckeye Village income tax listed. So now when he gets paid his earning, Buckeye Village is going to come out as well. Notice you're going to want to look at your withholding settings for Medicare and OPERS. Is this still accurate? Well, last year we had some budget shortfalls. At the end of the season for mowing, we had to start paying the employer's share of OPERS from the general fund. I don't want to continue doing that this year. We have enough money to operate. So make sure you're looking at the employer settings, and if you need to edit that, you would click on the Employer Accounts tab, and you can change it right here. Make sure both settings are the same. The Fringe tab will cover that, but I want both my employer share and the Fringe tab with the same setting. On the Details tab, it tells me that we have regular OPERS. I'm not changing that. I'm going to click Save and Close, and now the employer share of OPERS and Medicare is going to come out of the cemetery fund where he works. The example in the book is a more complex example. It shows us that the employee is going to be working in 2 different tax districts. And our employee, Jerry Jones, is not a good example of that. Well, number one, he lives in Buckeye Village, so he would be paying the Buckeye Village income tax. And we want to show you an example of multiple tax districts. I have some employees in my setup that will illustrate that better. So I'm going to go ahead and close the employee form and show you one of our employees that works in multiple tax districts, and I'm going to explain that to you. We're going to click Edit and Advanced, and we'll go to the Earnings tab. So notice on my Earnings tab, I have 3 different earnings. They're all the 2000 type. They're hourly wages, but I've given them a specific name. The Buckeye Station, the Little Station, and the Township Station. So why am I doing this? They're all the same rate of pay, the same frequency, and the same account code. Well, in our example, we have 3 different fire stations, 1 in each location. Inside the Buckeye Village, we have a fire station. And when this employee works at the Buckeye station, let me show you his edit form, and click on the Withholdings tab. I'm going to open this to full screen so you can see better. When he works at the Buckeye station, he has to pay Buckeye Village income tax, but not Little Village. There are two different tax districts. Now, he lives out in the township. Where he lives, there is no income tax, but where he works in Buckeye Village, he has to pay an income tax. So his attachments are going to be different for each of these earnings. So Buckeye Station, he has to pay Buckeye tax. In Little Station, he has to pay the Little Village income tax. So notice that the Little Station is attached to Little Village, but is not attached to Buckeye. Two different earnings with two different tax bases. I have to make these attachments in order for the W-2s to be producing accurate information. And last, our township station, when he works out in the township station, there's no income tax in the township. So when I look at his withholdings, I'm going to open that up to full screen. The township station earning is not attached to Buckeye or Little Village income tax because there's no income tax associated with that workstation. So the reason you would have three different earnings for the same pay rate, for the same frequency, is because each one has a different tax association. Notice on the withholding list, I can see the Little Village and the Buckeye Village, but from here, I can't tell what's attached. Make sure that you understand this is the list that the earnings can be attached to. It does not mean they are automatically attached to everything. Those complex tax associations with different work locations are usually associated with your larger townships with multiple stations or multiple cemeteries in and outside of incorporated areas with a tax district, or a library with multiple branches in different cities and villages. I just wanted to show you that example so that you would understand the different attachments. We're not going to go through the example in the book. We've found that most people in class don't understand the example that's in the book, so I've used an already set up employee to show the different fire stations. Let's move on. How to remove that trustee from the ODJFS report. Well, you remember that Sherry trustee was appearing on the ODJFS report, and I told you we can simply remove her from the report, but we must edit her earning so that she doesn't show up again. We're going to click Edit and Advanced, and on the Earnings tab is where we find our problem. I'm going to edit the earning. That's going to open us up to the $ form, and it's right here that we see the problem. The type associated with a trustee should be trustee, and they should be marked elected. Trustees are elected officials, and we sometimes see someone marked appointed, and I want you to notice the association change. When I mark appointed, the unemployment eligible box automatically checks. When I mark elected, it is automatically unchecked. Elected officials, whether they've been appointed to fill an unexpired term or whether they were elected to fill the term, they are elected. They are sitting in an elected position. So you should not use appointed for an elected official. Always use elected as the type for elected officials so they don't report to ODJFS. Appointed is often used for positions like fire chief, administrator, and other official appointments within an entity. Now that we've finished, we click Save and Close, and if we go back and add an ODJFS report, she won't appear on there. We're not going to take the time to do that. Our next section is how to add an employee, and I want to draw your attention to the Add Employee button at the top and the FAQs at the bottom. Remember that the FAQs, frequently asked questions, follow you in the software, and you can see that we have provided an employee screencast tutorial. Most entities don't hire new people very often. We understand that you have probably forgotten how to run through the employee wizard, making the correct attachments. We highly recommend that if you're not used to adding new employees, that you always watch the employee screencast tutorial first. and then click your Add Employee button. It will refresh your memory about those important attachments and save you time and frustration when you're trying to pay a wage when you haven't set up the employee correctly, and it won't work. On page 32, we start with the adding a new part-time seasonal employee. So the first thing we would do is verify all the withholdings are set up. The employee has turned in his I-4 and his W-4 and all the other forms I need for a new employee. And I'm going to check those forms and verify I have what I need in the software already. So when I look at the withholdings, I see that we already have Buckeye Village income tax. He lives in Buckeye Village. And I can see everything else is already here. I want to check my earnings and leave. He's going to be paid a regular hourly wage. He's not entitled to overtime, so we don't have a problem. So once you know that the structure is in place, then you start your Add Employee form. Now, we have an example of our internal employee data form that we fill out when we have a new employee. You're going to gather all the information that you need: health insurance, dental insurance, how much are they going to have withheld, what local taxes or school taxes do you have. Make sure that you're gathering that information in advance. I want to show you a website that can be very helpful. It's your responsibility to make sure that an employee's address is associated with the correct school, and that if there is a school district income tax, you will need to add that to the list of withholdings. I'm going to go to the internet, and my home page is our UAN link. We recommend that you go to the Ohio Department of Taxation's website to the Finder. Notice that you can use the Finder to see if there is a municipal income tax or a school district income tax associated with an employee. So you must check for school districts on all new employees. If you look it up, you can say by address, and you'll put in the employee's address and click Lookup. It will show you the school district that they live in and whether there's a tax. I always print that report and put it in the employee's file. So I have that information. If they have a school tax, you're going to have to make sure it's set up in your withholdings. If not, you would add it. On the Ohio Department of Taxation's website, you could find the school districts, their numbers, and the type of tax base, state tax base or income tax base. You have to set that withholding up and the school district number. So make sure that if you have to set up a new school district, you set it up accurately from the beginning. So we've checked, and we don't need to add a new school district. He doesn't live in a school district with an income tax, and I am ready to add my new employee based on the information starting on page 33. I'm going to click the Add Employee form and click Next. This looks like our little man form, the employee information. So we're going to type in the information. And the employee ID is internally set by your entity. Notice the ID's structure that we're using is last name, first initial sometimes, and we're going to continue that with Ryobi as his employee ID. I can tab through the form. The date hired may be the date that you hired him. It might have been hired at a meeting. Maybe he was authorized to be hired at the previous meeting and he was actually hired on another date. The OPERS member date is very different. The OPERS and OP&F members date is the date that they first became a member of these state retirements. So it might not be the same date that you hired him, and you'll need to make sure that you've got the correct OPERS or OP&F member date. If the employee doesn't know when they first became a state retirement member, they would need to call OPERS or OP&F and ask the question, and then they can give you that information. In our case, it's the same date. The hire date and the OPERS member date, 3/14. If your employee is an OP and FPF member, you would also need to complete the OP and FPF hours base. And if you don't understand the hours base, you must call OP and FPF and discuss this. It's very important. This number pulls into the monthly report, and it's required. Our next section is the tax exemption. So I look at the Ohio IT-4 form. He is claiming 1 deduction for state, and on the W-4 form, 1 deduction for federal, and he's choosing the married rate. Now, he's not giving me any bank account information, so I'm not setting up EFT for him, and I click Next. The software is always going to remind you that all state and local government employees hired or rehired after March 31st, 1986 are subject to mandatory Medicare coverage. This means that if a new employee is walking in the door and they tell you they're exempt from Medicare, they're not. It's required. So we click OK. And the next thing you see is the Additional Information tab. So if your entity has never set up any additional information fields, you would have nothing to complete. In our case, he doesn't have a CDL license and he hasn't attended a safety workshop, so I have nothing to complete here. We'll click Next. When you get to this point, you have saved Rob Ryobi. If I look in the list behind, he's already listed. If I quit before I finish the setup, I don't start the Add Employee wizard again. I simply edit the employee and complete the setup. So we'll say OK to this message, and we are at the step 2, Add Employee Withholdings. So remember, because some entities have multiple tax districts and they'll have different earnings associated with each district, we have to start with the withholding list to pull from. When I click Next, I can see that state and federal are automatically attached to every employee, and I'm going to select Continue Adding Withholdings and click Next. From my drop-down list, I see the active withholdings that I can select from, and I'm going to start the list with that required Medicare. The regular and fringe benefit boxes appear, and the software is going to default the 1.45% in the method used on the last employee that was added. That doesn't necessarily mean it's accurate for your new employee. Please make sure you understand whether you have fringe benefit Medicare, and if you do, only use it on the employees who are entitled to the fringe benefit. You would have legislation that authorized this. In our case, we do not have fringe benefits, so I'm leaving 0 in the fringe benefit box, and regular is going to contain the entire 1.45% of the employee Medicare withholding. I click Next, and I have to tell the software where the employer's share of Medicare is going to be paid from. Well, that's associated with the employee's earnings. I know he is only going to be a cemetery worker. He's not going to work on the roads or anywhere else, and that might be different in your entity. We have another example later where that's going to be different. In this employee, I know that he's only going to be working cemetery, so I'm going to use the no split method and choose the cemetery. Once I have that completed, I want to draw your attention. We are on the Appropriation Accounts Employer Share tab. When I click Next, it looks the same, but I am now on the Fringe Benefit tab. So if your entity has fringe benefits, you would simply need to verify this is the correct account fringe benefits would be paid from. If your entity pays fringe benefits from a different account, you can select the different account from this drop-down list, or add multiple accounts or the split method required. In our case, our fringe benefits is 0. We don't pay fringe benefits, but I have to leave the default, the same setting from my Employer Accounts tab in the box, and click Next. I'm going to continue adding withholdings, and my next is OPERS. So from the drop-down list, I choose OPERS Gov. He belongs in the government OPERS. And I have 3 choices to make, and again, it's going to default into the box as the last person hired was set up. That may not be true for this employee. So make sure you understand. Notice that the important flashes. It flashes for everybody because it is very important you set this up accurately. If you do not have fringe benefit legislation authorizing the 10% or a portion of it to be paid by the entity, you will put nothing in the fringe benefit box. If your entity has salary reduction OPERS and this employee is entitled to the salary reduction, the 10% would belong here and regular would be 0. But you can't just choose this as the fiscal officer. You have to have a salary reduction agreement with OPERS for any salary reduction to be placed in this box. In our case, we do not have salary reduction OPERS, and I'm going to continue with the 10% in the regular box. Now I have to tell the software where the employer share of OPERS is going to be paid from. And again, he's only paid from one account code in the cemetery fund, so the cemetery fund will also pay the employer share of OPERS. When I click Next, the software wants me to tell it if the fringe benefit will be paid from this account or another. If I have no fringe benefits, it's 0. I leave the default setting, the same as my employer share tab. If you have fringe benefits and it's paid from a different account, you would change this tab and click Next. OPERS is added to the list, and I need to continue adding withholdings. I'm going to choose Buckeye Village income tax, and the rate, of course, is 1%, and I'm clicking Next. Buckeye Village was easy. It does not have an employer share. I had nothing else to choose. That completes all of our withholdings for this employee. I'm going to click I'm done adding withholdings and click Next. And the software shows me I'm on step 3, add employee earnings. I go to the bottom and click Next. I see the withholdings at the top. The earnings and leave box is empty. I'm going to continue adding earnings, and I fill out the position first. In our entity, we use something vague like employee or laborer. In our case, maintenance is the term we use for the maintenance employees, regardless of where they work. The type is important to choose accurately. If the employee's position is not listed, they will be other. The department will be how your internal departments have been established. In our case, we're using payroll departments accurately, groups of people we want to pay at the same time. So I have an administration for all my elected officials that get paid at the meeting. And I have fire and EMS as one group because they're a little more complex, and I want to do them as a group by themselves when I have time to do that. Everybody else is in my maintenance department. They might work on the road, they might work in the cemetery. I don't need a different department just because they work in different areas. Maintenance is the department I choose for the group of people I pay together. So he is in the maintenance department, and then I choose the earning. On the right side, I choose hourly wages. I could edit the description, but I don't need to. He's only going to have 1 hourly wages earning. From the drop-down list, I choose his biweekly frequency, and I enter his pay rate from our local legislation, and I see that that's $11.25. He will not have any typical hours per pay period, and I want to look down here at the Detail tab. I can put in the details of his raise, the resolution number, the next revision date, and the probation end, terminated, and the leave of absence areas are all items that you can make use of, but it's not required. If this was an OP and FPF employee, I would have to enter the pickup code and the frequency. If you didn't know your pickup code, you would have to call OP and FPF. You will not be able to produce an OP and FPF report unless this is set for your OP and FPF employees. I've completed this form, and I'm going to click Next. And I need to tell the software what account code or multiple accounts will pay this earning. And he is paid from the cemetery fund. So I'm going to choose my other salaries account and click Next. This is the list of withholdings. Notice that federal and state are automatically attached, but none of the others are attached. You can tell their boxes are empty. I have to make the attachments. In this case, he only has 1 earning, and all the withholdings are going to be attached. I can click the header checkbox to select all and click Next. I've added his only earning, and I can say I am done adding earnings. And that takes me to overtime. Now, this employee is not entitled to overtime. He has no non-cash benefits and no leaves. I need to skip past these areas. I'm going to click Next and say I am done adding overtimes and click Next. And now I'm going to click Next and say I'm done adding non-cash and click Next. And my last, I'm going to click Next and choose I'm done adding leaves, and Next. That completes the setup process, and I can click Finish, and I get the opportunity to display the general information report. I always say yes, and when the display opens, I print this for my file. I'm going to go ahead and open this so you can see. Remember, I showed you this report in Chapter 1. So you have set up this employee. You have the documentation next to you. You want to make sure you've set them up accurately. Check the address. Make sure it's right. Check their federal and state exemptions and marital status. Was the EFT completed correctly? Pay status active. Check the social security number. Are they marked full-time or part-time? Notice that I have him marked full-time, and he is supposed to be a part-time employee. So I need to fix that. We want our OPRS member date to be accurate. I'm going to look at the earning, make sure the rate that I've entered matches the legislation that authorizes the rate, and I check and make sure I have added the right appropriation accounts. Notice the attached withholdings. If I failed to attach the Medicare OPRS and Buckeye income tax, only state and federal would be here, and that would key me into I failed to attach the other withholdings. The other withholdings would be listed below here, but they wouldn't be attached above. So I can see I have one mistake to fix. This is not accurate yet. I can go edit the employee, editing in advanced. On the information tab, I'm going to mark him part-time and click Save and Close. I would print the employee general information report again so that an accurate copy is what I have in the personnel file. That wraps up our first employee. Our next exercise, starting at the bottom of page 34, is for a brand new trustee. They were appointed to finish out the term of an elected official that moved away. So we're going to add the new trustee. Again, we are going to go to Payroll, Maintenance, and Withholdings to make sure all the withholdings we need are active, and they are. So we'll close that. I'm going to check the earnings. She's paid a salary. It's active. I won't have any problem with that. Go ahead and close that, and we're ready to click on the Add Employee button. We're going to go into step 1 and click Next. Betty, trustee. Going to complete her personal information. And social security number. And her hire date. She was appointed to fill the unexpired term as of 03/01/16. Her OPRS member date. She has given me 3/1. She's never been a member of a state retirement before. 3/1. And the marital deductions, 3 and 3. And married. I'm going to mark her female. Notice that changed my icon. And it doesn't make a bit of difference if an elected official is marked full-time or part-time. For UAN purposes, that setting is only going to pull into the ODJFS report, and elected officials don't pull into that report, so it won't matter. She is not going to be direct deposited, so we're going to click Next. And I'm always going to get the reminder that new employees have to pay into Medicare. There is nothing to fill out for the additional information tabs, and Betty has been added. I'm going to continue by adding the withholdings. Marking Continue and Next. From the drop-down list, I choose Medicare. And the 1.45% defaults into the regular box. In our case, that is accurate. We do not provide fringe benefits. And this is going to be different. Betty is paid from multiple account codes. Many of your trustees and some of your employees are going to be paid from multiple account codes. The best setting for the employer share of Medicare and other withholdings that have an employer share is object split. Object split means that you choose the object code associated with this withholding, Medicare, and no matter where the earnings are paid, because it can change from month to month, the employer share will follow the earning. So object split is always the best choice when you have multiple earning account codes. When object split is used, you must have the budget associated with that. Let me minimize and show you what I mean. If we go to accounting, maintenance, and appropriation accounts, you can see that in 100110, where the trustees' salaries are, in the same fund and program, 100110, I have the employer share of OPERS for those who will be OPERS, Social Security for those who will be Social Security, and Medicare for everybody. So the same fund and program that pays the salary, 100110, has the same fund and program for the employer shares. If I scroll down to the other funds where the trustees are paid, 2021330 I can also see that I have the same fund and program for my employer share of OPERS, Social Security, and Medicare. So object split will automatically attach the employer share with the earning because I have the budget and account structure to support it. So when you have multiple accounts paying individual earnings, it's always best to set up the same fund and program for your employer shares so object split will work. Let's go back to the Add Employee Wizard. I'm going to go to Payroll Maintenance to get our menu back to where we were and click on the taskbar to bring my Add Employee Wizard back up. So object split's going to work because I have the budget and account code structure to allow it. So we click Next, and my fringe benefit tab will have the same setting. I don't pay fringe. It is 0 on the details box. Clicking Next, I'm going to continue adding withholdings, and OPERS is my next. The 10% is in the regular box. I would never use fringe or salary reduction unless I had those agreements and legislation to back them up. We'll click Next. And again, I'm going to use object split because she's going to be paid from multiple accounts and I want the employer share to follow the earning. And click Next. My fringe tab is set the same and click Next. Continue adding withholdings. From the drop-down list, I'm going to choose our next withholding, Buckeye Village Income Tax. And it's a 1% rate. I click Next. And I continue adding. On the list on page 36, we see that she is opting into the health insurance. So from the drop-down list, I choose health insurance. And I need to fill in the amount associated with her withholding. So I check my internal policies. How much does she have to pay toward her health insurance coverage? And I'm going to enter the amount that's going to be withheld. And click Next. When you're using a miscellaneous deduction, that's the type. Notice up here, KOO, miscellaneous type. It shows that you have the opportunity to skip deductions. Well, a monthly employee, they're only paid once a month, so I don't have anything to skip. She's going to pay health insurance every single month. So I'm going to leave skip deductions, deduct from every pay period, and click Next. She is also taking the dental insurance. So I click Continue Adding Withholding. I'm going to select dental insurance and enter the amount. $4.15. Next. Again, I'm deducting this from every pay period. She's paid monthly. And am I done adding withholdings? Yes, I am. So I'm going to move Next, and it shows me I'm now ready to add the earnings. So I click Next and continue adding earnings. On the left, she is a trustee. If you have ever typed the position, it is going to appear in the drop-down list. The type is trustee, and the department in our case, remember these are set up at your entity, is administration. Notice that this is defaulted in as hired, and I am changing her to elected. She is an elected official. Even though she was appointed to fill the unexpired term, she holds an elected position. That's the correct setting. The earning on the right is going to be salary. The frequency is monthly. And the pay rate is going to be based on our budget, the date of her appointment, and the state pay rate for elected officials of the township, 1714. And she doesn't have any typical hours. I could complete the details tab if I wanted. It's not necessary or required. I can click next, and we're going to use a split method in this case. So we have no split, meaning only one account. We can't use that. We have multiple accounts. I have manual and percentage to choose from. Hours is not available for a salaried employee. They don't work hours. So let's discuss this. When you're paying wages from restricted funds, that would be anything but the general fund, you must back up your percentage split or manual split with documentation where they worked. They have to turn this in every single pay so that you know where to pay them. We most often see percentage used for township trustees, and the fiscal officer will set up the usual or expected percentage. If it changes with what they turn in for their pay, you would change the breakdown manually on their wage. So we have to have all of the account codes available, and the percentage can be manually edited on the wage if it changes. So we're going to start with the account codes for the trustees' salaries. Now when I click the drop-down list, I can choose these one account code at a time, but remember I can choose the name and then scroll down to the S's and see all of the trustees' salaries. And I can enter those. Now you have to enter some kind of percentage. Let me put the account codes in first and we'll talk about that. So if I add all of the trustee salary accounts, these are the only ones that are set up at my entity. You may see more or less. What would I default into my wage for the starting point for the trustee salary? Well, I can put 100% on the general fund and leave the other two 0 and then edit it on the fly manually. Because if you don't have documentation to back up paying from these two restricted funds, you're not going to be able to pay anything from them anyway. That's one method. Other methods are if the trustees have divided up responsibilities, things that they oversee during the month, they may have different departments that they have a higher percentage of. I'm just going to use the examples in the book on page 36. We're going to say 10% general fund, 25% road, and 65% cemetery. That would indicate that this trustee's primary responsibility for oversight will be at the cemetery fund. I don't know whether your trustees divide up responsibilities this way or not. Remember that if you're using percent split, you have to enter percentages that total 100, but the account codes can have a 0 on them. The 0 makes them available on the wage when you need to edit. So I'm going to click next, and I can see the list of withholdings I've added, but remember that only state and federal are automatically attached. I have to attach the others. In this case, we only have one earning, so I'm going to attach all withholdings. And remember, object split means that I've got one OPERS and one Medicare, and they are going to follow the earning when they're paid from different account codes. And I click next, and that is the only earnings she needs. So I'm going to say I'm done adding earnings. Elected officials don't have overtime, non-cash benefits, or employee leaves. So I'm going to skip through those steps. And click the Finish button. That's going to give me the chance to display the general information report, and I'm going to send that to the printer for my file and then look at it very closely. I'm going to check all of the personal information at the top, make sure I've got the correct social security number and dates, make sure the correct exemptions are entered. The salary, I'm going to check that again against the pay scale and our budget, our last amended certificate, and the date of her appointment. Was she entitled to the new rate? Make sure you have that accurate. The account codes that I've set up, but remember that's your beginning point. Notice that the attached withholdings are going to show you whether you failed to attach, and then the list of withholdings are going to show you what account codes and selections that you've made. So I can see object split was my chosen selection for the employer share. I've got Buckeye Village, health insurance, and dental insurance. So I'll print that for her file, and there's nothing to edit. You always want to check the report and make sure nothing needs edited so that you won't be surprised at the next payday. All right, our next demonstration begins with page 37. We have another full-time employee. Notice that we are always going to check our list of withholdings based on the employee's information they've turned in, and we see that this employee lives in the village of Anytown, and Anytown has an income tax. I always go to the school district finder and I check to see if they are associated with a school district with an income tax, and he is not, so I don't have to add the school tax. I do have to set the Anytown income tax up before I can begin the Add Employee Wizard. Now, what you want to make sure is on your list of withholdings, check and see if it's inactivated, because you may have had somebody that used to live there and not there anymore. So if it's not there, we're going to have to add this from scratch. And we start with the bottom level. The payee for Anytown income tax is not Regional Income Tax Agency. It's Anytown Income Tax. So I have to go to General, Maintenance, and Vendor Payees. And again, I'm going to check my active. I don't see Anytown Income Tax, and my inactive. I don't see Anytown Income Tax. So I know I need to add the new vendor payee. I click the Add button. I add the Anytown Income Tax Department name. Be very careful. Once this has been attached to the withholding and to the employee, you're not going to be able to correct the misspelling. I'm going to make this available in Payroll Withholdings. Notice when I marked Payroll Withholdings, the account number box turned green. It means it's required information. So what you need to know is, does Anytown Income Tax assign you an employer withholding ID? If not, you can either put the federal or state tax ID in this box. We've been assigned a number. So I'm going to add that in my account number box. And if you're going to mail them a payment, you want to add a location. Notice when I click Add, the software says this vendor payee must be saved before adding locations. Save now. That means it's going to do it for me if I click OK. If you cancel and click Save, you lose the opportunity within the Add form to add a location. You would have to edit the vendor again. So we're going to say OK, and it saves for me. See, it did that. And it opens up here. The description is a payroll withholding. Your description should let you know what the address is for. Payroll withholdings, 154 Main Street. Now, if you have the contact information, you would fill that out, click Save, and Close, and it's completed. I'm going to click Save and Close. So that's the bottom level. I can't add a withholding until the vendor payee to be associated with it has been added. Now I can go back to the withholdings form. Notice my module is still back in General Maintenance. I can click on Payroll Maintenance to bring it back. And we're going to click Add for withholdings. And it is the Anytown Income Tax. The process group is local tax. Very important to choose that accurately. And my payee is Anytown Income Tax Department. My name abbreviation, this is going to go on the W-2. And my rate, the Anytown Income Tax is 0.5. And we click Save and Close. Now that's been added to my list of withholdings that I can pull from in the wizard. And we're ready now to add our new employee. I'm going to close the Withholdings tab, and we will click the Add Employee Wizard. Starting with step 1. We're at the bottom of page 38, adding Ray Joy. Social Security number, and the hire date. Again, The date they were hired may not be the same as their OPERS member date if they have ever been a member of OPERS in the past. And if you are adding an OP&F member, remember that you have to enter their hours base. He is going to be a full-time employee, and he wants 2 deductions and married for both state and federal. He hasn't given us his direct deposit information, so we're going to click Next, and we get the Medicare message. Always have to add Medicare. We don't have anything to fill out on the safety workshop or the CDL license. And we get the message that Ray Joy has been added, and I can see him in my list behind. We're going to click Next and start adding his withholdings. These are going to be a little more complex. Medicare first, and he's going to be paid from multiple account codes, and he's regular. He does not have any fringe benefit here. I'm going to use Object Split for Medicare so that it always follows his earning. Same with the fringe tab. Continue adding withholdings. This is going to go a lot faster because you've seen this 3 times now. The 10% is in the correct box. We have regular, Object Split, and OPERS. Next. Next. Continue adding withholdings. Anytown income tax. That's his rate. Next. That was all there was to that. And now we get down to health insurance. He is going to be withholding $37.50, and he's a skip deduction. He's bi-weekly. I'm going to be skipping that 3rd pay period. If this was a child support, because these are using the miscellaneous union withholding type, if this was a child support withholding, you would be sure and enter the case number and order number here. It's not a child support, it's health insurance. I'm going to click Next, and I see my skip deduction. Well, I definitely want to skip the 3rd pay period, so I'm going to choose Skip the Pay Periods. I have to choose his frequency, bi-weekly, but I'm not going to choose the calendar. Remember, I have a skip calendar editor that has a calendar that I can apply to this new employee. So if you have the skip calendar, you won't have to fill these out individually. It'll save you a little time, but you have to remember to apply the skip calendar when you're finished adding the employee. So we'll click Next, and you get the warning, you didn't choose anything. Well, I'm going to use the skip calendar, so I can say yes. Continue adding withholdings, and I'm choosing the dental insurance. The amount for his policy is $2.81. Next, I'm going to use the skip deduction, but I want to apply the calendar. All I have to do is set the frequency and the skip pay periods marked below. Click Next, and I understand that I have to use the skip calendar or nothing will be skipped. I can't forget to do that. On the list in the middle of page 39, we see supplemental federal and supplemental state. This employee has chosen to have extra withheld, and we have those withholdings already set for you. So I'm going to choose supplemental federal, and I have to put in the exact amount they want to withhold. It can't be a percentage, it must be an exact amount. So it's $15, and click Next. I'm not skipping any deductions. And then I'm going to add the state supplemental. And he wants an exact amount, $10. Next. And deduct from every pay, next. We have one more withholding on the top of page 40, deferred compensation. So make sure that if you have an employee who's opting into the deferred compensation, that before you set that up, you have approval to begin withholding from the deferred compensation people. We'll click Next, and I choose deferred compensation. And the exact amount he's having withheld from every paycheck is $50, and he is not skipping any deductions. And that completes our list of withholdings. So I can say I'm done adding withholdings and move on to earnings. Continue adding earnings. And from the left, I choose his position. Again, we do not give everybody a title. He is simply a maintenance worker. We see these workers, employees, laborers. We use maintenance here as a general term. Our type, because he doesn't fit any of these descriptions, is other. And our department, again, the group of people I'm paying together, is maintenance. He is automatically hired and unemployment eligible. From the drop-down list for his earning, I choose hourly wages, and his frequency is biweekly. His pay rate, according to our local legislation, is $15 an hour. And he doesn't have any typical hours. I could complete this information if I want. If he was an OP and FPF employee, I would have to complete the pickup and frequency boxes as well. I click Next, and the software wants to know what account codes are going to pay his earning. Well, this is an employee who works all over the place. He's going to clean the town hall, he's going to mow in the park and the cemeteries, and he is sometimes also going to work on the roads. So I need all of those account codes pulled in here. I can't use percent split. That's never going to be an exact percentage. But every time he turns in his time card, his hours are indicated where he works. So I can use manual split. Let me put the account codes in first under manual split, and then I'll show you the other two. I can choose the account codes by clicking the name, and when they sort together, choose the items. 100120, 190. And the next one, 2021330, 190. And the next one, 2041 410, 190. And the last, 2171 610, 190. So now I have all the account codes. I don't know if there we go. All the account codes listed in the box. Manual split means he could work at any one of these places, and I won't know until the time card's turned in how many hours to apply to each account. Manual split. I'm going to manually enter those every wage. And that's recommended for employees that work all over the place. Percent split would be like our Betty trustee. You would have to default in a percentage. It would be really rare that you would be able to do percentage for employees like this that are all over the grid. Hour split is also available, but again, it's going to be rare that you'd be able to do this. Unless an employee is designated that they must work these hours and supervisors are keeping track of those hours, you could put in the hours worked to default in on the paycheck. Using this default is not recommended simply because if the employee has leave, you could accidentally overpay. So hour splits, you would simply put in hours associated with where they are supposed to be working. If they turn in their time card and this is not where they worked, you would have to override that on the wage. And if you're using this, you better have documentation showing where they worked. The same as any other split method. When I use manual split method, it means that it's not locked down or defaulting to any particular account code. But once again, I have to have documentation as to where they worked. So the fiscal officer should receive a time card that includes the hours that they worked or a summary of the hours that they worked in each area so that they can fill out the time card by the hours. But the supervisor needs to be keeping work logs that back up this documentation. The fiscal officer is not the only person who has to keep track of spending from restricted funds. Whoever is supervising the employees had better be able to back up this is where they're spending their time. So manual split is what we're going to use because it changes every paycheck. And I click Next. Again, I see a list of withholdings. Only state and federal are attached. I have to click the header checkbox when I want to attach everything. If you have one of those multiple tax districts, you would make sure you're not checking a tax that shouldn't be associated with this earning. And we're going to click Next. I don't have any other earnings. He's going to have one earning with multiple account codes at the same pay rate. So we are done adding earnings. And I'm going to add overtime. He is entitled to overtime. And I click Next. From the drop-down list, I choose the overtime, and I have to put in his base rate, $15 an hour according to our legislation. Notice the software is automatically going to take the base rate, multiply it by the overtime rate for the overtime pay rate. You won't have to calculate that on your own. We click Next, and it must be attached to an earning. So what you have to understand is overtime does not act independently. It has no withholdings associated to it. It must be attached to the earning, and then when it's paid, we'll use this earnings withholding settings. We click next, and it defaults into the account codes and the setting that was the same on the earning, and that is exactly what I want here. When he works overtime, I need to know whether it was cleaning the town hall, out on the roads, in the cemetery, or in the park. I'm going to leave it manual split because his time card will show me how many hours and where he worked. And now we click next. And overtime is added. If you have multiple overtime rates, you would continue adding them. He's not entitled to other overtime rates. So I'm going to say I'm done adding overtimes, and he has no non-cash, so I'm skipping past that. He is entitled to leave, and I will have to set these up. So we click next, and I continue adding leaves. And from the drop-down list, I choose the leaves that he's entitled to as a new employee. From the drop-down list, I choose sick, and I put in his base pay rate, $15 an hour. Notice that it says paid when used. If he was a salaried employee, he would be not paid when used. They always receive the same salary. Notice the leave is earned per pay period, and he is earning 3.1. Your accrual rates based on your policies would be entered here. If your sick leave is adjusted in at the beginning of the year or on an anniversary date or after probation, you would have the setting leave is credited manually. If it is prorated based on hours worked, you would fill in this complex hours per hours worked. And hours in this case, he accrues an exact 3.10 hours for every pay period. And I can click next. And again, leave does not act independently. It needs two attachments. So the first attachment is the box. The box is the earning the leave is attached to for accrual purposes. In our example of Henry Heru, who had 3 different earnings because of 3 different tax districts, I would need to check this box for all 3, because no matter which district he worked in, it's still going to count toward his accruals. In this case, I only have 1 earning, so there's 1 checkbox. Notice the WH circle. The leave must be attached to 1 earning only for WH. And what that means is the withholdings associated with this earning. So my hourly wages is my only earning. I have to attach it as the WH earning as well. On page 42 through 44, we have some explanations about notes on attaching leave to earnings. You should read through those if you have multiple earnings and odd tax associations. You want to make sure that your leaves are attached to the correct earning as the WH. I'm going to go ahead and click next, and it's going to default in automatically to manual split, the same as my earning it's attached to. That would be odd. However, you could keep this the same, and then when somebody turns in sick leave, you would determine how to split that based on the hours they didn't work where they were supposed to. It can be complex. Remember, you are associating pay to restricted funds. You have to be careful in the method that you use to percent split. So, for example, I'm just going to say, for example, percentage split could be used. We'll say that he so rarely works in the road that we would never pay leave from there. He only works rarely. And I would put a larger percentage in the general fund and less of a percentage in the other 2 funds. So remember, when you are assigning percent split to leave payments, when you're paying from restricted funds, you have to be able to back up that percentage by documenting that the employee actually works at that level of percentage. The general fund should pay for anything that you can't document. For time purposes, I'm going to go ahead and move forward with this setting. Notice that I only have 80% allocated. If I click next, I'm going to get a red dot. I want to show this to you. Anytime you get a red dot, it means you have not completed something. The total must be allocated to 100%. So I only have 80. I still need to add 20%. And I'm going to add that. to the general fund. Okay, so now I have 100%. So anytime you get a red dot, it means that you haven't completed what you need to complete. We'll go ahead and click next, and we continue adding leaves. Our next on the list is vacation leave. He is paid when used. I put in his rate of pay. And again, your accrual rate, or whether you credit manually, is going to be entered here. If you've set up your leaves for a beginning employee, then it's going to default in at the beginning accrual rate. And we'll click next. Again, I'm going to be checking the box associated with accrual earning, and the WH earning is associated as well. It defaults into manual split. I can leave that. I can also choose the percent split, but I better be able to back up these percentages. Next. I'm continuing adding leaves. Our holiday leave is very different than the other two we've done so far. Holiday leave is always credited manually. It is paid when used at $15 an hour. Again, if he was salaried, it would be not paid when used. Holiday leave is usually earned and paid on the same time card. They don't usually put holiday leave in at the beginning of the year, because if an employee quits mid-year, they're not entitled to the holidays when they weren't actually employed. So holiday leave is going to be based on your entity's policies. We click next and have to make the attachment. Again, where is this going to be paid? You may determine that you can't figure out how to split these between restricted funds, and you're going to only pay from the general fund. Remember, the general fund has to be able to budget all that. I just want to give you options there to show you. Let's continue adding leaves, and I'll show you an example of comp. Not every entity allows comp time. Smaller entities usually do not provide comp time. They simply pay the overtime because they can't afford for the employees to have any more time off than they're granted with their current leave. We also have to enter whether it's paid when used or not paid when used. Salaried would be not paid when used. Hourly, we always have to enter their rate of pay. It's always credited manually. No one's going to accrue comp. The comp accrual rate must be set properly for your entity's policies. In our case, when an employee works overtime, they can choose to gain time and a half off at a later time. We are not going to pay them time and a half at a later time. We're going to accrue time and a half hours off. Comp time is usually associated with maximum balances, so I'm going to discuss these on this leave. Maximum leave balance means total amount you are allowed to have in the bank at one time. So your maximum leave balance is going to be in your policy. If your policy doesn't state there's a maximum, you can't use this. So I'm going to build an example of our fake Buckeye Township. We have a problem with people abusing comp time. So they have set a strict policy. The balance that you can have at one time is limited to 5 hours, period. So that means that they can work overtime and earn up to 5 hours, but they can't earn any more until they use some of that. There is also an annual accrual maximum. These are two different things. This says that they cannot accrue more than 10 hours in an entire year. So these are two different maximums that mean different things. If an employee tried to earn 10 hours at once, the maximum leave balance would stop them at 5. If they tried to earn more than 10 hours in a year, it would stop them because this maximum is too much. So they mean two different things. You can't choose to put these in based on what you want. Your policy has to specifically state these are maximums. Many leaves don't have a maximum. Don't fill these out unless your policy states them. We're going to click next. And again, I have the same attachments for accrual purposes and the WH earning to associate with withholdings. And we'll click next. I'm going to leave that manual split for time's sake, and we move on. I am done adding leaves and click next and finish. display that general information report, and I would print that for my files and review it very carefully for accuracy. So he has hourly wages, overtime wages is clearly attached to the hourly wages, the leave attached, sick, vacation, holiday, and comp. If you didn't see them attached, you failed to make that attachment. The attached withholdings listed there. And then below we see our individual leaves. This is the first time we've added an employee with leave, so we can see if we've set this up correctly. Hours earned, there's the accrual rate, and per pay at $15 an hour when he's paid. And you can see the individual details of each of these items. Below the leave are the withholdings. You can see we've set up object split for the employer share. We have only OPR's regular and Medicare. No fringe, no salary reduction here. He's got supplemental state, supplemental federal. Make sure I've entered the right amounts on those. He's got his anytime income tax, health insurance, dental insurance. I'm checking these numbers to make sure that I've set that up accurately and that he's approved for the $50 deferred comp. So if this is accurate, the printed copy goes in my file and my employee is ready to be paid when he turns in his first time card. Now, remember that I have not applied the skip deduction calendar to my new employee. I'm going to choose the skip calendar editor, choose the skip third pay period in a month, and apply the calendar. So I have to choose the frequency, biweekly, and the withholding, dental insurance. I only need to choose Mr. Joy. Everybody else is already attached. And click Save, and then choose the health insurance. Choose Mr. Joy and click Save. And now his skip deductions are set up. Let me show you. On the withholdings to match everybody else. So that way you don't make a mistake choosing the wrong date. You apply the calendar the same to everybody. You just have to remember the last thing you do is apply that skip calendar once you finish the employee setup. And now we're ready to move forward on page 45 with posting wages. So I'm going to close the employees form and we go to payroll, transactions, and wages. My batch list is empty. That means I haven't started any wages that haven't been posted yet. To add new wages, I click the Add button at the top. Our class exercise begins at the bottom of page 49 and continues on to 50. We're going to add the wages for the monthly elected officials for our meeting on Thursday. So we're going to click the Add button. Notice there are 3 types to choose from. There's really just one for ongoing wages. It's going to be the first one, warrant or EFT. So whether you are direct depositing wages or posting to a check, it's the exact same process. It's simply the posting that'll be different. The other 2 items are not going to be used by the average user. Many fiscal officers have never done a manual wage. Conversion is for brand new UAN clients who are converting mid-year to the UAN payroll software. They post a conversion wage to bring their year-to-date payroll information into the software so they can produce a W-2 at year-end. It's never going to be used by anybody else but a brand new UAN client. Manual is going to be extremely rare as well. It means you hand wrote a payroll check. Now, I don't know, a lot of you have the ability to manually calculate exactly what a payroll check could be if you didn't have access to the software to see what withholdings each employee should have. I would think that would be extremely rare and highly dangerous because I'm not sure that manually you can calculate those correctly unless you really know payroll. So warrant EFT is going to be our choice. And we're always going to get the reminder to verify the pay period dates for the wages. It's critical to the OPRS and OP&F reports. State retirement. Remember, the paycheck date is going to be the tax liability date for all other withholdings. We're going to click OK to that message, and the Add Wages form opens. The first thing we have to select is the department that we're paying. And remember, I said in our best practices, in payroll, the departments are groups of people we pay at the same time. So I'm going to choose administration. All of my elected officials, everybody that gets paid together at the monthly meeting, that doesn't include any of my employees, are grouped into administration, and they're all paid monthly. I'm going to check the frequency as well. But over to the right, this is where I have to change the pay period. It's still set to February 1st through 29th, and that's not what I'm paying. I need to pay March 1st through March 31st. To the right is the tiny plus sign. When you click the plus sign, it advances the pay period one pay period. So when I click plus, it advances to 3/1 through 3/31. That's the pay period I want. That's the easiest way to advance a pay period without skipping any dates. Now my list contains the previous fiscal officer, the 3 trustees, and the 3 zoning board members. You can see their positions listed in the middle. Our zoning board does not get paid unless they had meetings in the past month, and they didn't have any meetings. So I'm just going to click Brutus and the 3 trustees. Those are the only ones that need wages at this time. And I click Save. The software produces these wages, and in the bottom left corner, when they're finished, it shows that it's saved for wages. Notice that they're in the batched list behind our Add Wages form. The software will allow me to close the form, and we can edit these. So I'm going to click Yes, and we'll follow through editing the wages based on our exercises starting on page 50. Remember that you should have checked the pay scale for the previous fiscal officer to make sure they were being paid their last paycheck accurately. If this amount was correct, there's nothing to edit. Please look at the withholdings tab and look and see. They have dental and health insurance being withheld. So if you are paying the previous fiscal officer their last paycheck, you need to know whether they still owe the dental and health insurance or whether this needs to be zeroed out of their final paycheck because this would be for the next month. We don't know the answer to how you withhold. The software is very easy to override. If Brutus does not have to pay any more dental or health insurance, you simply override that amount with zeros. You would never override taxes or the employer share. That would not be appropriate. But to override the health and dental that he no longer has to pay is fine. Click Save, and the software is automatically going to advance us to 2 of 4. Notice that from the drop-down list, I can see we started with Brutus and we've moved down to Betty, and we have Carrie and Sherry as well. Let's go ahead and look at Betty Trustee. Remember, Betty is our brand new trustee who was appointed to fill the unexpired term, and her term began March 1st. Let's click plus to see the distribution. Notice that it says under account code %split plus to edit. The plus is clear to the left over here. I click the tiny plus sign and it opens up to the account codes. Now remember, the trustees may be set up at a %split, but they have to turn in documentation that backs up the percentage. You may have to override that on the wage. Well, Betty is going to take over the supervision of the cemetery fund, but in her first month in office, she spent all her time at the town hall reading through the resolutions and minutes from the past year to bring herself up to speed. So we're going to override and show that the general fund will pay the entire wage for this month, because I can't document that she did any work for these 2 restricted funds, roads or cemetery. The general fund will have to bear that burden. Notice that when you use object split, the employer share follows when I edit the earning. When I first started, the employer share would have been the same percentage as the earning. Now that I've edited the earning, both the road and the cemetery fund have 0 allocated to them, and the entire employer share is allocated to the general fund. So the object split will do its job if you have the budget and the structure for it. Let's click Save for Betty, and it advances us to Carrie Trustee. Again, this trustee is set up as a %split. I would have to look at the documentation they turned in and check it against the numbers here to make sure that the %split is accurate. Notice that he does his primary supervisory work on the road, but he still has general fund. He shows up for the meeting. He does other things that are allocated to the general fund, and the employer share will follow his earnings. I don't need to save. I can just advance. We're going to look at the last one. Again, a percent split. I would check their documentation. If I had to override, I can simply click in the box and override the amounts that are defaulted in. Percent split for the trustees is generally a starting point. You have to look at their documentation to produce their wages. So I don't have anything else to save. I can close. This is my group that are ready. All of these are going to print to a check. They are a warrant type. The pay period end date is 3/31. That's accurate. And the 3 trustees have the same salary. That might not be the case in your entity. We recommend that you always print a batch wage report and verify everything is accurate before you send these to the printer. I'm going to show you the batch wage detail, and we'll go to Payroll, Reports and Statements, Batch Reports Wages, and from the drop-down list, Batch Wage Detail. Select everybody on the list. This is the report that I kept for audit. It shows the pay period. It's not posted yet, so it simply has a batch wage number. It shows the net paycheck, the total gross earnings, the individual earnings was the salary, and it shows all of the withholdings. So you can see that it defaulted in with the 415 and 154.27 being withheld from the check, but you can tell that I've overridden that with 0. So there's a difference between what was set up in the software and what was calculated, because this employee did not need the health insurance withheld from his last paycheck. You would have to check your policy to determine if that is accurate for you. You should continue your review of the batch report, and if everything is accurate, let's go back and post these wages. Select all and click Post Print. Confirm I want to post 4 selected items. And I choose the post date. Now, today in Payroll Training Land, it is April 4th, but our meeting date is April 7th. I want to post these for the meeting date. Pay day is always the meeting date for our elected officials. So even though I'm doing the work today, I am posting them with the check date of the 7th. The tax liability will be associated with the 7th. Now I'm going to always confirm my next check number. If that was not accurate, I would change it. The software would show me I was skipping warrants and they would be voided. Over to the left, the wage printing. Notice that we have checkmarked the employee address on the checks. If you have police officers, you probably do not want their addresses on the checks, because then the check images and their addresses would be probably in public places. So make sure that you're leaving that unchecked if you have police officers or employees that their private address has to be kept secure. The pay stub employee leave balance is a good idea. If you have your leave set up and it's accurate in UAN, you always want that to print right on their pay stubs so the employees can see their leave balance. The pay stub salary account distribution, I don't know very many employees who care what account codes are paying their wages, so I would leave that unchecked. Let's go ahead and click OK. And when the print form opens, it shows me that it is posting these items, and I'm going to load these checks exactly in my drawer and then click Print. Once they've printed, this system message appears. Did all items print successfully? If they have printed fine, I click Yes. And we're going to continue adding the biweekly wages. At the bottom of page 51, the Add Biweekly exercise begins. I click the Add button and choose Warrant EFT. I'm going to remember to carefully consider my pay period so I post them accurately, so my state retirement is accurate. And I'm going to go ahead and do the fire and EMS and the maintenance department together. I have everybody's time cards, and I have plenty of time to get the job done. We're going to go ahead and click Biweekly. And remember, this is showing me the last posted pay period. I don't want to post to that pay period. I want to advance. I'm going to click the tiny plus sign, and it advances the pay period to 3/12 through 3/25. That's what I'm paying. I'm going to select the employees that need to be paid, and for class purposes, we're not going to pay everybody. I'm going to select everyone and then uncheck a few. Steve Friendly, Henry Hero Sr., and everybody else is going to remain in there. So you choose the employees and their earnings that you're going to pay, and you click Save. The software processes these wages. In the bottom left corner, it shows you it saved 8 wages, and in the background, we have a batch. I want to show you the difference between this batch and our earlier batch. Notice that we have some negative net wages and some 0 net wages. That's nothing to be alarmed about. That simply means that they have 0 earnings and exact set withholdings, like supplemental state or federal, health insurance, dental insurance, child support or garnishments. Those withholdings that are set up for a flat amount are showing up first, but there's no earnings to take it from. It's not going to produce a negative check. This is simply showing the starting point. When I click Close, the software gives me the opportunity to edit all of them, edit only the 0 gross and negative net wages. Well, remember, the salary folks probably need some editing as well, especially if they have leave to document. So I'm going to say yes to edit everyone. So this is our edit wage form again. It's a lot busier than it was with those elected officials. We still have earnings in the upper box, but notice we have a lot more earnings. This is an employee who's paid hourly, so their leaves are paid when taken. In the lower box, we have earned, used, and denied leaves. Notice that it's going to show us the accruals that are automatic, 3.10 for both sick and vacation. And holiday does not earn automatically. It's going to be a manual entry when we have a holiday, and I'll show you that later. Notice that we have the earnings, withholdings, and leave balance tab. If an employee turns in that they've taken leave, you can check this tab to see if they had an available balance to take. Let's take a look at the time card starting on page 52. We're not going to edit these in alphabetical order. I want to start with the easiest time card and move forward to more complex issues. So we choose Rob Ryobi, our new part-time cemetery worker. His time card has turned in 15 hours of pay. I'm simply going to enter 15 hours in the hours and items box. And when I press enter, the software can see 15 hours paid. Notice that it's automatically calculated his withholdings and employer share. And if I click on the withholdings tab, I can see those calculations. Notice that there's no federal tax taken out. That's because according to the tax table, for an employee with his deductions making this amount of money, he's not going to have any tax withheld. If an employee wants extra withheld, they'll need to fill out a W-4 form or an IT-4 for the state and tell you exactly how much extra to take out. And you would add the supplemental state or federal withholding. There's nothing we need to edit. We're going to go ahead and click Save, and the software would move us to the next alphabetical employee, but Rob was at the bottom of the list. Our next example starts at the bottom of page 52, and that is Sunny Day. He's an example of our salaried fire chief. He's paid bi-weekly. He accrues both sick and vacation. He has holiday leave, and he also qualifies according to our policy for comp time. So according to our policy, if he works overtime, and that would be established by our policy, he can put that on comp time and save it up and take time off. On his time card, it says that he worked 3 hours of overtime that he once applied to comp time. 3 hours. Notice that the software is going to multiply that by the 1.5 rate and give him 4.5 total hours. So comp time, when it's earned at time and a half, you enter the hours worked overtime, and the software multiplies it by the time and a half to give them time and a half off at a later period. And remember, we had some maximums set. If you look at the leave balance tab, this is set up differently than my example. Our maximum for this employee is 25 hours at a time, and he cannot accrue more than 40 in a year. So he is not hitting the maximum. The software would warn me if it was denied. He also took 8 hours vacation leave. If I look at his time card at the bottom of 52, I need to enter the vacation used. So if I look at the leave balance tab, he has 37.6 hours available to take, And when I enter used hours 8, when the wage is posted, it will reduce his leave balance by 8 hours. Notice that it's also going to accrue 3.10. When I make entries in the leave, it does not change the leave balance tab. This tab is always going to remain at what they came into the wage with. The earnings tab show you what you are using or earning at this point. We're going to go ahead and click Save. Our next employee is Barry. From the drop-down list, I choose Barry Deceased, our cemetery sexton. And he has all one account code but multiple earnings. He has hourly, overtime, and holiday, sick, and vacation leave paid. Let's take a look at his time card. It says he worked 72 hours and he took 8 hours of vacation. So if we look at this on the earning, this is set up to default typical hours 80. And we don't recommend this unless you have prorated leave that has to be based on a typical hours. Because when somebody gets paid vacation leave and I add his 8 hours vacation, if I don't remember to edit the 80, notice I'm going to end up accidentally paying him 88 hours. It would be wiser to not default hours into the time card so that you never make the mistake of automatically paying a default. So his time card says he worked 72 and took 8 hours vacation that he's being paid for. He's getting paid for 80 hours, and in our case, this is accurate. I can always check his leave balance tab. Did he have 8 hours of vacation? Yes, he did, so that's not going to be a problem. I click Save. And our next example is Carl Crank. Alphabetically, he falls right in the next slot. This is an employee who works in more than one place. I never know when he's going to work on the road or at the park. So I click the plus for hourly wages and I look at his time card. And it clearly shows me that he worked 20 hours on the road and 20 hours at the park. And I enter those individually on the account code level. As I enter them, it fills in on the manual split line. Now, I can't edit the manual split line. I would have to edit the individual lines to change the total. So it's supposed to be 20. He's worked 40 hours, and then he has taken 40 hours of sick leave. And I would make sure that if you have forms approved by your supervisor, those are supposed to accompany the time card, everything has been filled out accurately, and I enter his 40-hour sick leave. Now remember, this is showing up as a percent split, so if he really doesn't work 50-50 in these two departments, I shouldn't be using a 50-50 split. I just want to show you how the split methods work. We're not recommending that you default a specific split in without having actual documentation to what they should be split by. Remember, we are paying these from 2 restricted funds, and we have to be able to back up the documentation of a 50-50 split between the two. There's nothing left to edit. I can look and see if he had sick leave, but he's got 600 hours. That 40 is not going to be a problem. And I click Save. On page 54 is our next employee, Perry Permit. And Perry has multiple earnings. He has hourly wages that he's paid. Again, it's a plus to open up to the manual split account code area. And I'm going to look at his time card and complete it based on the hours that he worked. 2 hours for the first account, 2 hours for the second, that's our zoning, 38 hours on the road, and 38 hours in the park. Now when you fill out the detail, you check the total. You can click on the minus sign to collapse the detail, leaving you room for other things. He's also turned in some overtime. And it says he wants paid, not comp time. So we're going to click on the overtime. And he worked in the 2021. Make sure I get these on the right accounts. 3 hours overtime on the road. And 1 hour overtime at the park. So I make sure I have the total 4 hours overtime. His total hours paid is 84. He has nothing else on his time card. and I can click Save. Our next employee is the new employee, Ray Joy. So from the drop-down list, I'm going to choose Ray Joy, and he is a complex employee. We're also going to illustrate holiday leave. Now, I understand that none of the other employees had a holiday, so we're going to just have to pretend for a minute we've got a holiday. I don't want to waste your time showing you holiday on every single employee. I just need to illustrate it on one. So we're going to pretend that there is a holiday in this time card. So between 3/12 and 3/25, we have National Fiscal Officers Day. It was a federal holiday. Everybody had the day off. We are only using that for an example on this item. So when you have holiday leave, notice that he has holiday leave earned, and you check your policy. How do you know if they get the paid holiday? Well, it has to meet the conditions of your leave policy. And in our fake Buckeye Township policy, it says they either have to work or have approved leave off the day before and the day after the holiday, and then they get paid for the holiday. So I'm checking his time card, and I can see his leave approval forms. He had sick leave, 18 hours of sick leave. And since he's met the conditions of our policy, I am going to grant him holiday leave. So notice that if I look at the leave balance tab, he has 0 holiday leave. That means I have to grant it on this wage. I override the 0 and put in the 8 hours that he's earned. There's his 8 hours of holiday leave. And then I can pay him the 8 hours of holiday leave. No problem. We also need to enter the hours worked. So we'll click on hourly wages, and I'll enter those from the time card on page 55. 4 hours for the general fund, 22 for the road, 8 for the cemetery, and 20 for 2171. Now we do have an odd example of showing leave. He's worked only 54 hours, and he's turned in overtime. What are your overtime policies? When you have a sick day, does that count as regular hours worked for overtime? Your policy has to determine that. This is just an example of a policy. It doesn't mean your policies say that they can take 18 hours of sick and still have overtime that week. Make sure you understand your policy. And we're going to enter his 1.5 hours of overtime on the road and 3 hours of overtime at the park. So check and see. I've got 4.5 hours of overtime. And we're still not at 80. What are we missing over here? Holiday leave paid we took care of. Sick leave, 18 hours. Let's check our leave balance tab. He's got plenty of sick leave. That 18 hours won't be a problem. I'm going to type 18 in. And now I check the total. Again, that's a percent split. I would have to be able to back that up with documentation. I'm going to check my total. Hours paid, 84.5. It matches his time card. Now what I want to show you, this is how it should be done. What happens if you forget to earn the holiday leave? Well, let me show you what happens if you don't override with the leave. You're going to get a negative leave balance warning. The software is warning you. You are trying to pay a leave when they don't have a leave. Now that should resonate with you. It's like, oh, I forgot to enter the earned leave. I'm supposed to do that on every wage. And we got a call from a fiscal officer that said, one of my employees told me that his holiday leave shows up as negative on his time card, and I just told him that's what holiday leave looks like. No, it's not. It means that she's been getting this negative leave balance notice all year, and she's not doing anything about it. Negative leave balance means they don't have leave to pay, and you're paying it. That's going to be a findings in recovery when you're paying leave they don't have. In this case, it's an accident. The fiscal officer has to enter the 8 hours granted. So when your holiday leave is supposed to be earned and paid or used on the same time card, you have to remember to enter the holiday leave. If you get a negative leave balance notice, something is wrong, and you'll need to check that. We're going to go ahead and click Save. And our last employee example is Art Part. He's a part-time employee, he doesn't work a lot of hours, but we have a garnishment for him. So when you have garnishments, you often have to calculate the amount to be paid on every single wage. Our example in the book says that the court order tells us if the net paycheck is less than 150, zero should be withheld. And if the net paycheck is 150 or more, you have to withhold 10% of the gross. So what I want you to understand is these court orders for garnishments can be complex manual calculations that you will have to set up defaulting to one point into the wage. The first thing we have to do is enter his earnings. So he worked 15 hours. And now that I've got an earnings in, I can look at the withholdings tab to see how much is calculated. I can't tell whether to withhold any until I put in the earnings. So I look at my court order and I look at the employee's earnings and the withholdings and I figure out what am I supposed to do. Well, because the if net paycheck is 150 or more, it should be 10%. I set this up at 10% to automatically default into the wage. But when he makes too little, I have to override that. So I can see that his gross check is not even 150. He is not going to have any garnishment withheld. I have to override that to zero. Sometimes the best way to set up that garnishment is to put it in for a penny and then manually calculate it based on the court order and override with the exact amount that you should be withholding. But you have to set it up to default as something, and once you enter the earnings, you can come to the withholdings tab and enter the calculation. So make sure that you understand those garnishments may have to be manually calculated. We'll go ahead and click Save, and that's the last of my earnings to edit. So I'm going to close. Notice that we still have an employee with no earnings. As I got to the bottom of my stack of time cards, I see that our returning seasonal employee didn't turn in a time card. And I call the supervisor and ask, and he says, well, he didn't actually start work until, and he tells me the date. So I can tell that this employee is not going to be paid. So I'm using this as an example to illustrate that if you add a wage for an employee who is not going to be paid, you simply delete it from the list. This is a batch list. It's a work in progress. And if you don't need the wage that you've added, you can simply delete it from the list. We confirm that we're deleting one selected item. It did not change his pay status as active. He is still on the active edit employee form. And the next time I add wages, he'll be available to select. I've simply deleted him from the batch because I don't need a wage for him for that pay period. All right, remember when we get our wages in batch, we should always check the batch wage report. We get calls every day from fiscal officers who have made mistakes in payroll, and I guarantee you, if you will check your batch reports first, you will be less likely to post wages with errors. So let's go to batch reports wages. We're still in payroll reports and batch reports wages over here to the left. And again, my favorite is the batch wage detail. And let me show you, I'm just going to pick a couple. You'll of course print all of these. For class purposes, I'm going to display. And then I'm going to compare them to the time cards. This is my last chance to check and make sure this is right. So the first thing I'm checking is the pay period. Is it accurate? Yes. I'm going to look at the earnings. This person is salary, so there's no change in his salary. I'm looking at his withholdings. Did he have any garnishments? Have I calculated those accurate? None of those have had any changes. When I come down to the leave balances area, this is what's going to show on the employee's time card. It shows that he's earned 4.5 hours of comp time. Remember, he worked 3 hours. It's multiplied by time and a half, and that gives him 4.5 hours to take off later. Notice his sick and vacation accruals appear. Those are automatic accruals for every pay period. I didn't have to change those. And as a salaried individual, he has used 8 hours of his vacation. He has no denied leaves, and his leave balances as of this posted wage are in this far right column. This employee will be able to know what his leave balances are when he receives this wage. So you're going to check these reports carefully to make sure there are no errors. Let me show you the next one. It's more complex. This employee has several earnings, multiple account codes. This is where you're going to put your ruler on this page and check and make sure you have entered the hours on the right account codes for each earning. My regular hourly wages, did I get overtime on the right account codes? Holiday leave paid, should I have split it the way I have? The same with sick leave paid. Does the percent split need to be edited? This is my last chance. And again, I'm looking at the withholdings. Did I have anything extra? Does he have a court order? Did I have to manually calculate a garnishment? And have I done that accurately? And then at the bottom, of course, are their leave balances. Check those carefully to make sure you have entered the right amounts. This will be the leave balance that prints on their pay stub. So always check these reports carefully. I would recommend that you keep these for a permanent record and staple the time card to it and keep them in a binder or file by employee for every pay period. Now that I've finished the batch reports wage review, I am ready to post. And we want to show you an example of EFT wages. So we can sort the list by type. If I click the type at the heading at the top, it sorts them and groups them together. I could also change the type at the top of the list to show me only one type. And then I could select everything in the list and then change it back to warrant and select. You can choose to show only one type. You just don't want to forget what you're doing. In this case, I'm going to use the sort button to group them together. And I'll choose the 2 warrants first. Now in our case, all of these employees, whether they're paid by check or by electronic deposit into their bank accounts, payday is still Friday the 8th. Remember, in payroll land, it is the 4th. I've had plenty of time to get my payroll, but remember, when you deposit directly through EFT, you have to upload that file to your bank usually 2 days before payday. So on the 4th, I have plenty of time to get that done. My warrants are going to post to the 8th, and I am not handing them out until the 8th. The employees get their checks on post date. They don't get them before. So make sure you understand, payday is payday. They don't get them before. Click post print. I'm posting the 2 warrants. The software is asking me for the post date, and that is going to be Friday the 8th. Notice that the wage printing area remembered my last selection, and I can keep that or change it. I'm going to confirm my next check number is accurate and click OK. And I'm going to send those off to my printer. I'm only going to put the check numbers in the range shown here into the printer so I don't accidentally ruin other checks. And I click print. And once those have come out of the printer, I'm going to review them. And did they all print successfully? Yes, they did. Now I have my EFTs left in the batch. I'm going to select all of them and click Post Print. Posting 5 selected items, click OK. And it's always going to remind me that I have to set the post date according to the form, and it's usually 2 days in advance. So payday is Friday the 8th. And that's no different for the EFT employees. The stub note area, I could type a note that would appear on everybody's stub. You want to be careful entering items on here. This creates a public record. You don't want to get yourself in trouble. Notice that the warrant number is grayed out. I can't change that. It's not going to be used. It's just grayed out because the form shows everything the same for both types. I can choose the EFT to print to plain paper or EFT forms. Now, unless your entity has purchased special EFT forms that you load into the printer, you're always going to leave that plain paper. Not very many people have the EFT forms printed up. We're going to print to plain paper and click OK. The software is showing me that it's printing 5 EFTs, load plain paper. So if you loaded a stack of checks, get them out of there and click print. Notice if you want 2 copies, one for your payment records for the board to approve and one for the employee, go ahead and change the number of copies and then click print. Once they're finished, I review the items and then answer the question, did they print successfully? Yes, they did. Now we need to complete the process for our EFT batch. I need to bring my menu items back to payroll transactions and EFT. So if you upload an electronic file to the bank, you must choose the EFT option here. The deposit date, that's our post date, is listed. All of the employees with the wage posted to that date are listed together. And I click File to create the electronic file. The software shows me the file name has saved successfully and it's located in the UAN e-files folder. I click OK, and then it gives me the opportunity to print a report, and I say yes. I always keep this report for audit, so when it opens, I click Print and send that off to my printer and close. If you email the pay stubs, we're not going to cover that in this introductory training. We don't have very many clients using that right now. That'll be in some proficiency training later. You would click this blue question mark for more information on that. If your entity does not upload an electronic file to the bank, you may have access to a web portal where you log into the bank's website and manually enter the individual net paychecks for the employees. All of their EFT is set up at the bank's website. Now, this is not bill pay. This is true EFT deposit directly to their bank accounts. If you are using a manual entry, I would create the electronic file anyway and get the report and use the report to enter the net items. In addition, if you post these items in an EFT batch, even if you don't need to upload the electronic file, on your bank rec, those EFTs are grouped in one batch that can be cleared together. So I'm going to go ahead and close this form. Remember, in the UAN e-files folder, you're going to find that under Computer and your local disk and UAN e-files folder. Once you upload that electronic file, you need to delete it from your UAN e-files folder. It contains bank account and employee information that's not encrypted. We want to go ahead and permanently delete those from this file. To permanently delete an item, remember you're going to click Shift and Delete so that it's permanently deleted. If you deleted it by just clicking on the Delete key, it's moved it to your recycle bin, and you would need to empty your recycle bin. Let's go ahead and close that item. And we're now ready to deactivate the previous fiscal officer. We've paid Brutus his last paycheck. He's not going to get another. So we're going to go to Payroll, Maintenance, Employees. Mark Brutus, he's received his last paycheck, and click Deactivate. I can't remove him. He's been paid this year. He's still going to get a W-2. All his withholdings are going to report as they should. He is simply not going to show up in the Add Wages form because he's not active. So you deactivate employees who are no longer going to receive a wage. They will still get their W-2. At the beginning of page 60, we give you some suggestions to review after every payroll. So let's go ahead and take a look at that. I'm going to wave my magic wand, and it's going to be next week in Payroll Training Land. Here we are on April 11th. So payday was the 8th, last Friday. It's April 11th in Payroll Training Land, and I've given myself 24 hours after payday. So they were paid on Friday. The next work day is Monday. I've waited all day. It's later in the afternoon. Nobody's called me to tell me there was anything wrong with their paychecks. They've all reviewed their pay stubs. And you want to give yourself that 24 hours to make sure that there's nothing wrong with the paycheck. Because if employee's paycheck, a physical check, is wrong, they can bring it back in, you can void it, and you can add it back in. If you've paid withholdings, you're going to complicate the matter. So we always want to give you that 24 hours before starting your withholding payments. And now let's review that list. Wait until you've passed out payroll to make sure employees do not have any changes prior to completing the following review. So we're already there. Do you have withholdings that are paid after each payday? If so, pay those withholdings and complete any reports. Well, let's take a look. Payroll, reports and statement, withholding reports. Now remember that this withholding summary always defaults to the unpaid items. I can see that I have deferred compensation that's going to be paid after each paycheck. And that's just our sample in Buckeye Township. you'll have to pay according to your schedules. Child support, garnishments, and deferred compensation are common items that have to be paid after every single pay. So I know I need to make those payments. Let's complete this list. Did you just pay the last payroll with a paycheck in this month? Well, no, we didn't. Not a paid check. This is only April 8th and April 7th at the meeting. So my monthly employees have been paid the only paycheck they're going to get, but not for the April pay period. And my biweekly employees just got paid on April 8th. They're going to have another check this month. So for taxes, I don't need to pay taxes yet. Now remember, if you're a semi-weekly depositor, those large entities, you would have to pay your federal, state, and probably local taxes at every paycheck rather than once a month. So make sure you know your pay structure and how often you pay your withholdings. In our example, the only thing we pay after every pay would be our garnishment or our deferred compensation. And did we just pay the last pay period end date of the month? We did. In both the monthly and the biweekly, we posted the last date in March. So it's time to do my OPERS and OP&F reports. And then the last question, did you just pay the last payroll with the paid check date in the quarter? Well, no. This is the first month of the quarter, so I don't have to worry about quarterly withholdings. So in our class exercise, what we're going to do is pay the deferred compensation that I have to pay every payroll. Payroll, transactions, withholding payments. And we're going to click the Add button and choose a regular. And I send them a check with the stub from their invoice. My post date is going to be today. And I'm going to choose Ohio Deferred Comp. One person has that withholding. Notice it's defaulted to the oldest unpaid, and that's accurate for this purpose. Save and close. That's my only withholding to pay for my regular taxes and withholdings. And click Post Print. Next warrant number is correct. I click OK. And send that off to my printer. I have to put the check in the drawer. It shows me exactly what check to load. And I check it when it prints. It's accurate. I click Yes. All right, the next section, how do I pay and report state retirement withholdings? Well, here's page 61, where I told you earlier in the training that the OPERS website has an employer tool where you can enter your last pay period date and it will create a calendar like this. I went right to the OPERS website, put in our fake last pay period date, and it produced this calendar for me to use all year. It is especially handy because it shows me the pay period end date that is going to be the last one to appear on each monthly report. That far right column shows me the months that are going to have 3 pay periods in them. So I want to highlight those and hang this up near my desk so I can always keep track of my pay period end dates that belong on each monthly report. State retirement is different than taxes. When we paid taxes early in the training, we started with the vouchers. We posted the vouchers and then the supporting reports to go with them. We don't do state retirement in that order, ever. So state retirement in almost every way is opposite of your regular withholdings. Let me show you how we're going to do this. We're going to go to Payroll, Reports and Statements, External Forms, and we're going to start with our OPERS contributions. That's Ohio Public Employees Retirement System. I can see that the previous fiscal officer has added the OPERS January and February reports. I don't know if they were accurate. I have no idea if this is what they filed with OPERS. All I can see is this has been added in the UAN software. To add the March report, I click Add, and the Add OPERS Contribution Report opens. I have to choose the OPERS type. I'm going to choose G for government. That's what we are in Buckeye Township. And if you are G and L, you're going to produce 2 separate reports. I'm going to choose the month of March. I'm going to open this up to full screen. The software is automatically going to pull in all posted wages with the pay period ending in March. That's the criteria for the state retirement reports. Notice the begin dates Some of them began in February. This is not a problem. This is a biweekly pay period. The pay period end date determines their monthly report. Now, there's a few things you may have to edit with an OPRS report. At the bottom of page 65, we see some items that we're going to edit in the pay period. Notice that our new employee, Rob Ryobi, is not on this list. So I want you to think for a minute and don't connect it to the wages we just posted, because we had to create a mistake in order to illustrate this. When we did the wages, everybody was posted to the same pay period. We wouldn't see this. But sometimes an employee will turn in their time card after everyone else, and you accidentally advance the pay period, and they are not on this report. If you find a problem, you always want to investigate further before completing that report. So we're going to close without saving, no changes, and notice that it's not in the batch list. Remember, I showed you a report earlier in the training where you can see all the pay periods that have been posted. We're going to go down to wage reports, and from the drop-down list, wages and overtime summary. I'm going to mark it for the year, and I'm going to choose one employee that gets paid every single pay period and compare it to our new employee, Rob Ryobi, that should have appeared on this report. Remember, our wages and overtime summary shows us that block of information of each pay period. So I can go down here and see, here are the paycheck dates and pay periods paid to our sunny day. And I can see that the check on April 7th, right there, was posted to pay period 3/12 through 3/25. But when I look at the paycheck dated 4/7 for Rob, it's posted to the next pay period. I accidentally posted his wage to the next pay period. So you're going to have to evaluate. You're going to have to realize what your mistake was. Rob was turning in the time card for 3/12 through 3/25. It was my mistake. And remember, we didn't really make this mistake in the wages example, but we have to build this in so you can see the difference. So you're going to evaluate this report, compare your employees. Sometimes everybody was posted to the wrong pay period. And again, you would use this comparison of there should not be a gap in one pay period end date to the next, and you shouldn't have two paychecks 2 weeks apart to the same pay period. So once you find your mistake, check dated 4/7, posted to the wrong pay period end date, it should be this pay period. I am armed with the information to fix the problem. We close this and go to Payroll, Utilities, Pay Period Adjustment. I am always going to narrow the selection by so I don't accidentally change something that's already correct. The paycheck's dated 4/7, and my frequency is biweekly. And my by-end date, notice that I have 2 dates to choose from. Well, the 3/25 end date is the correct one where everybody but Rob is listed. If I choose the 4/8, it contains only Rob, who was posted to the wrong pay period. So I'm going to select him and change his pay period to what it should have been. 3/12/16 to 3/25/16. And when I post, it shows me that pay period, and now everybody that should be listed is on that pay period. So I'm going to close. And we'll go back to the OPRS contributions, and when I add the report now and choose G Government, April's not even on the drop-down list. I choose March, and we'll open this up to full screen. Let me show you the edits you may have to make. Okay, when you have new employees, you always have to enter a pay period begin code, PPB. That's this column. When you have employees that have quit or been fired or retired, you always have to enter a pay period end code. Their begin and end dates may have to be edited as well. So let's address that. Well, Brutus Buckeye is no longer with the township. His term ended on 3/31. Now, Brutus did not run for re-election, so I can mark retired for him. If you actually beat somebody at the election, you would have to call OPERS. I don't know what code you would need for them. Our next items are pay period began codes. We have 3 new employees. Rob Ryobi is new. Notice if you have a seasonal employee that is new or returning, you also give them a code for seasonal, but he's just a new employee. Betty Trustee is also new. And Ray Joy is a new employee. So remember, when you have pay period begin and end codes, you're going to look at their pay period begin and end dates. Each of these employees that are new have to have their begin code edited to the exact day they began work. Rob Ryobi's actual first day is 3/15. He did not start on the first day of the pay period. I changed his begin date. The other 2 new actually started at the beginning of the pay period, so I don't need to edit their begin dates. Steve Friendly, who quit, where is Steve Friendly? I need to add a pay period end code for quit. His end date needs to reflect the last day he worked. It's very important that that's accurate. So his last day worked was 3/4. The wages were posted to the full pay period. It is only edited on this form. And once I've made those edits, I am finished. The only other thing you may have to edit is if one of your part-time employees only worked one of the pay periods, you may have to expand the range so that their begin and end date reflected the same as the full pay periods for the other employees. In our example, Art Part worked both pay periods, so his full date range is already there. Over to the right, you see the type. This is regular, and that means we don't have salary reduction. We have no benefit, no tax benefit to this. So R is the right type. Click Save and Close. Now it's in my batch list. There are several methods to file. You can upload the electronic file to OPERS. So you would mark the OPERS G March file and click File. It creates the electronic file to upload with the name, shows you its location in the UAN e-files folder, and click OK. You should also print an internal copy for your records. I can show you by display what that will look like. I would exclude the Social Security numbers and mark the internal use report. And it shows me exactly what's going to be uploaded to the website. Now this report is also useful because it shows the cumulative total of the employee share. If you've got multiple pages, the last page is going to show you the total employee share, and it's also going to show the total employer share. The employer share will sometimes have a rounding difference. This will be important to note when you are making your online payment. So this report is nice to have printed before you upload the report. I'm going to close that. If you actually print and send your report in the mail, you'll simply mark it and click Print. It makes a printed copy. Keep an internal copy for your records as well. When you upload your electronic file to the OPERS website, you're going to direct their website to browse your computer. You need to be on your C drive in your UAN e-files folder, and there is your OPERS upload 2016.03. You would select this file. Remember, once it is uploaded and you're finished with it, you should permanently delete it from this file by clicking Shift and holding your delete key, and it will ask if you want to permanently delete this file. You can say yes. I'm going to go ahead and show you the payment for OPERS to go with it. For those of you that have OP and FPF, after I'm finished with OPERS, I'm going to come back and do the Ohio Police and Fire Pension Fund report. So we're going to go to Payroll, Transactions, and Withholding Payments. Now keep in mind, I have uploaded the electronic file to the OPERS website and submitted it, and I can see my exact payment. I can see exactly any rounding difference that's reflected in the employer share, and I am ready to make my payment match my online payment. I'm going to click Add and choose State Retirement Electronic. My post date is going to be reflected in the date I'm paying online. I'm going to choose the 11th. My payee from the drop-down list is Ohio Public Employees Retirement System. And it's going to default to the oldest unpaid. In my case, it is current. It's not flying back several years. So if you still have old unresolved issues, you're going to have to drive this forward to the correct year and month for reporting. I select all the wages in the list, and then I'm going to look at my total payment at the top. If my total payment online says 32 cents, I'm going to go to my Employer Accounts tab and enter the rounding difference. This is entered on the payment only, not the report, and it's always the employer share. I'm going to add the 2 cents, 0.02, to my general fund account, and now my payment matches exactly. So that's the order of doing your OPRs. Always do the report first, submit it online, and make your online payment. Add your voucher in UAN to match exactly, entering a rounding difference if necessary. Now, if it was a negative 2 cents, you would just enter negative 0.02 and check the amount to see if it matches. In our case, it was a positive. And now that it matches, I'm going to click Save and Close, mark it, and post my voucher. And I can tell it to print 2 copies, one for my payment and one for my withholding file. It has printed successfully, and I click Yes. Now we're going to go back and do the Ohio Police and Fire Pension Fund. I'm going to close the OPRS contributions, click on Payroll, Reports and Statements, External Forms, and OP and FPF contributions. I'm going to add and choose Fire. You'll choose whichever OP and FPF type that you have, and I'm going to choose the month from the drop-down list. Now, OP and FPF looks very different than OPRS, and you have to understand their differences. There is no pay period begin and end codes. These base hours, remember that they have come from the employee setup. You had to set up their base hours. In the months for biweekly employees, when there are 3 pay periods, their hours paid are going to come in here with a higher amount. And on those 2 months a year, you're simply going to edit their base hours to match. That would be the range of 3 pay periods rather than 2. All other months, their base remains the same, and their earnings are supposed to be equal to the base. In this case, we do have 160 hours base paid to each employee. They all worked each pay period fully. I don't have any overtime for these employees. We didn't have any holiday pay. Nothing that would be difficult. The OP&F report can be very difficult with a lot of complex earnings and codes. If the payroll is set up accurately, the UAN software can easily produce a correct report. But if it's not set up accurately, we need to make some changes to your payroll structure so you can produce a good OP&F report. In this case, we've got no problems to address. I'm going to go ahead and click Save and Close. You can mark it and print an internal copy for your file by clicking uncheck the Social Security number, mark for internal use. I'm not going to send that to a printer. I'll show you display. It looks the same as an internal copy. This is what you would keep for your file. It shows the total gross salary, their base hours have been met, the employee deductions, and the employer share. Again, you can tell if there's going to be a rounding difference by comparing this amount once you upload your report. So this is my internal copy for my records, and I'm going to click File to create an electronic file to upload. It creates the electronic file, shows me the name and the location in the UAN e-files folder. I would log into the OP and FPF website and upload that report. Remember, when I browse back to my computer, I'm going to direct it to my C drive, local disk C, double-click UAN e-files folder and grab my monthly OP and FPF report and upload it to their website. Follow the instructions on their website to submit that report, and then compare the balance due, especially the employer share, to see if there's a rounding difference. Remember, once you've uploaded, you want to permanently delete this file by holding Shift and Delete, and it will delete that file permanently. Now we're going to make our payment. I can click on the Withholding Payments tab I left open, or go to Payroll Transactions Withholding Payments to reopen that tab. I click Add and choose State Retirement. Warrant will look exactly like electronic. I'm going to go ahead and choose Warrant so I can show you the OP and FPF remittance form. For those of you who actually send a check, you will produce a remittance form to go with it. We're going to click on Warrant. Our post date, again, I am posting these as of today because I have permission to pay these and can get the check signed between meetings. Ohio Police and Fire Pension Fund, it is defaulted to the oldest unpaid, which is my March that I need to pay. I'm going to select all the wages, and I'm going to look in the upper right corner for the balance. This is the total amount of my UAN payroll payment. If the website shows that there is a rounding difference and I need to change that, we're going to reduce this. My website shows a 2-cent reduction, and I'm going to enter the 0.02 negative. This reduces my payment so that the payment matches what it should. Remember, this is a rounding difference that's calculated on the total month. In the case of the 941 for federal, the federal government allows you to bring in your fractions of cents so that their calculated total on the entire quarter is adjusted to what you actually withheld for each paycheck. OPERS and OP&F want you to round the payment for the rounding cents. It's not an error in the software. It simply has to be rounded because they're calculating the entire month as a total. We click the Save and Close, and I'm going to mark this warrant and post it. Confirm my next check number. Load the check in the printer. And once it prints, I'm going to verify that it has printed successfully. I'll say yes and close my withholding payments form. And I'm going to also close the OP&F contributions. I'm going to take you back to payroll reports and statements and external forms to show you the OP&F remittance. If you're mailing a check, it should be accompanied by the remittance form. The payment has to be posted first, and then you can add the remittance. It's done by the check number. So this is the check that we've produced. I select it, and the software is showing me a message that the fractions of cents adjustment is going to have to be incorporated into this payment. So I know I have to edit. So let's click OK. Everything on this tab looks okay. I don't have to change anything. But on the Contributions tab, I need to edit my employer contributions so that it reflects this adjusted amount. So I'm going to click on that amount, type 2428.78. And I'm going to delete the adjustment. And now the column for fire is matching exactly the payment. So they don't want the adjustment sticking out here. They want you to zero out the adjustment and use your calculator to do the math to incorporate it in the employer share. Once you've done that, remember reporting type, standard monthly report. Remember filing type, you filed electronic. You would make the selections based on here. Click Save and Close. Mark it and click Print. Remember, you're going to want a copy of this for your file. It doesn't let you change that. We're going to say it's going to ask you to verify it for accuracy. We'll say OK, and make sure you sign it if a signature is required. If you're sending a check to OPERS, you can also create the OPERS remittance once the payment has been posted. I'm going to click the Add form, and we're going to have to pretend this is a check because I posted a voucher. So we'll pretend that this is a check. Because there was a rounding difference entered on the payment, we say, okay, I know I'm going to have to edit that. And you'll see the 2-cent adjustment listed here. Well, this is an employer share adjustment. So I'm going to delete that line by clicking the X. And then I'm going to change this 34 cents to 36 cents. And as soon as I tab over, it changes the total, and it now matches my total payment. So you'll have to enter the rounding difference on the remittance form, just like we did with OP&F, if you're sending a check to OPERS. Save and close, mark it, and print it. This completes Chapter 2. We're moving on to Chapter 3, Less Common Transactions. We're at the top of page 72. In our first less common transaction, how to deal with a damaged or lost paycheck or an EFT that did not go through. So let's deal with these one at a time. We're going to go to Payroll and Utilities and Payroll Payment Utility. The first thing we're going to talk about is how to reissue a paycheck. Our first example starts at the top of page 73. Ray Joy came into the office and said that he accidentally washed his paycheck and needs a new one printed, and he shows me the mangled pieces of what used to be his check. So I can tell from that it was his real check, and I'm going to issue him a new check. Now, I am not going to void and add a new wage. I'm going to use the reissue process to preserve his tax and retirement that's already been paid and reported. So I'm going to change the type on my payroll payment utility to narrow it down to wages warrant with the status of outstanding. Then I'm going to look for Ray Joy's paycheck. There it is, $35.80. Now payday was 4/7, and it's not 4/7 any longer. I'm going to reissue this check to the today date on a brand new check without corrupting all of the withholdings that were reported already. So I'm going to use reissue. The reissue button is going to preserve everything on the first check that has been destroyed and bring it onto a brand new check. So we'll say, okay, my reissue date is today. When I'm reissuing a paycheck, I always use the stub note. My next good check number is 3582, and I'm going to click OK. The software is automatically going to replace everything for me. So 3582 is loaded into the printer, and I click print. And now we see the new check at the bottom of the list, and the other one is not going to appear here because it's not outstanding. If I change this to all and scroll to the bottom of my list again, I can show you his original check is now voided and his new check is $35.82. So the software will reissue beautifully. So let's talk about an EFT. Many people think that if they go direct deposit of wages, they'll never have a problem with checks not being cashed. Well, it's a whole different problem with EFT. So let me change my selection to wages EFT, and I'll change that also to outstanding. And I'll explain what happens sometimes. Well, Art Part accidentally forgot to tell me that he closed his bank account that his EFT is set up on, and he opened a bank account at a different bank. So when I uploaded my electronic file, it went out from our bank, and then it came back because Art doesn't have that account anymore. Art wants to be paid. How am I going to get that paid to him? Well, Art can just give me his new bank information for the next paycheck, but I am certainly not going to add the new wage because this wage, this EFT, has tax and retirements that have already been reported and paid associated with it. I am not going to corrupt that. So Art is going to have this reissued to a check. So when the EFT bounces back from a bad bank account, I'm going to reissue that as a check. It's going to void and reissue one selected item, preserving the tax and retirement payments and reports, and noting it, it's going to be reprinted as a warrant. I'm going to have to get this signed, and he's going to have to come pick it up. I click OK. My reissue date is today, and I'm going to type a stub note. And I'm going to verify the next check number and click OK. I'm going to load the check into the printer. And my EFT disappeared from the report. If I change it back to all and change it back to all, when I come down here to the bottom, Art has a check where before he had an EFT wage that is now voided. So it doesn't mean that they can never have EFT again. It simply means I cannot EFT that to a different bank than we just did. So we're going to have to get the documentation from Art to change his bank account, payroll, maintenance, employees, and Art part. Edit and advanced. This bank account is no longer correct. And I need to put in his new account. And I am unchecking pre-note sent because I haven't got confirmation back yet. He's not going to get an EFT wage until I have the pre-note sent and confirmation from the bank. We click Save. And then I want to create his pre-note to upload to my bank. EFT pre-notes. And notice that I've got a bunch of people that are appearing on this list. These are people that used to be EFT and they are no longer. So make sure you're not grabbing people that used to be EFT. You're going to have to give your bank some advance notice. So I'm going to date that the 14th. I am unselecting everybody but Art part and creating one EFT pre-note. I'm going to go to my bank's website and upload that from my UAN e-files folder. And then banks handle that differently, the confirmation that it went through okay. Once it's verified by my bank, I get a message that I can display a report of the saved EFT file. I can display it and then print it, but you see it's really not giving me much information. I would put this in Art's file to show that I uploaded the pre-note. Until the pre-note's confirmed, he's going to receive a paycheck. Once that pre-note's confirmed, I'm going to go back to employees and Art part, edit and advanced, and mark the pre-note sent. Save and close. His next wage will be EFT again. Our next section is on page 73, the withholdings editor. Now I showed you a peek of this earlier, but we're going to use it again in a practical example. So turn to page 74, and our example is the dental insurance has renewed and the rates have increased. So the employee's share withheld from their paychecks is going to increase as well. And you can see the grid in the middle of page 74. I've already done the work. This is the old rate for the different types of insurance coverage, and I have the new rate for the different types of employee coverage. Let's take a look at the withholdings editor and see how we're going to use it to our advantage. We're already in payroll maintenance. We'll choose withholdings editor. And from the drop-down list, choose the dental insurance. And I'm going to open this up to full screen so you can see better. Notice the different employees have different rates because they have different types of coverage. Well, I want to group them together, and I can do that by clicking the value at the head of the list. This will group the different rates together. When the rates are going up, I want to start at the top, the $37.50, and work my way down to the lowest rate change so I don't accidentally move a low rate into the new rate. When we look at our $37.50 rate, it is not changing, so I don't need to select those employees. I'm going to choose the next group, the $11.25. I'm going to mark the change to amount and change their rate to the new rate of $15. I'll click Save. And it resorts the list once you save. I can click Value to group them together again and choose my next lowest rate, $4.15, mark the amount changed to, and change their rate to $6, and click Save. I'm going to choose the value again, sorting them together, and choose the last rate. I'll choose the top and all the ones in the middle. $2.81 is going to change to $4 and click Save. Once everybody has been updated to the new rate, I close the form. So you don't have to only use the withholding editor on a tax, like in January when a local tax is changing, like our Buckeye Village, when everybody would change to the new rate. You can also use it for those health and dental insurance when everybody's rate isn't always the same and you need to group the employees together. I'm going to go ahead and close the form, and that completes our section on the withholdings editor. Our last section is leave payouts. So often the payout of leave, when it's not being taken, you're not taking 8 hours of vacation, you're not going to take vacation, but you're going to get paid out the vacation leave. Those are payouts. Sometimes at retirement or when you quit, you get paid out your leave. Those are often not pensionable. You need to understand the pensionable and not pensionable items with your OPRs and OP and FPF. State retirement is going to either qualify or not qualify. You should always call OPRs and OP&F to verify whether this payout is going to qualify for state retirement or whether it needs to be paid from a non-retirement earning. So let's go to the structure of our earnings to see if we have one. If I go to earnings and leave, notice I've got two: vacation payout non-pensionable and sick leave payout non-pensionable. Now, I don't want you to be misled that every single vacation and sick leave is paid out when someone leaves. Your policy determines when you can pay these. Sometimes the policy is use it or lose it. Make sure you understand your policy and don't pay these unless they're due to the employees. For our example, Steve Friendly quit and we are paying out his final leave balance. I've called OPRs and found that his vacation payout of unused leave is not pensionable. So I'm going to use this non-retirement earning. If you didn't have one already set, you would click the Add button, give it a name, specific so that you knew what it would be, and then choose the non-retirement items. It will give you the next available number. I already have the earning available, so I don't have to add it. I need to add the non-retirement earning to the employee. He doesn't have this in his employee setup. So I'm going to click Employees, and I'm going to edit Steve Friendly, Advanced, and I'm going to go to the Earnings tab. Now, he may have had leave payouts at an earlier date, so I want to check his inactive list. There's nothing there. And then I'll add the new earning. So his position is the same as it was before. If you don't know what that is, you would edit his other earning. He worked in maintenance, his type is other, and he was in the maintenance department. I'm going to choose the vacation payout non-pens from the drop-down list. Frequency is going to be different. Frequency is sometimes annual, it's sometimes biweekly. The frequency that you're choosing is going to use the tax table for that frequency. He's being paid out 77.8 hours. Well, that's very close to his biweekly paycheck. So if I choose the biweekly frequency, the tax table is going to connect to about the right amount of tax to take out. The pay rate is his legislated pay rate when he left, $15 an hour. I can't save. Remember, I have to make attachments of the withholdings, and I have to tell the software what appropriation account this is going to be paid from. So under the withholdings tab, I'm going to select the withholdings to be collected. Now notice he has Medicare. That's got to come out. What about supplemental state and federal? Well, I have a W-4 and an IT-4 that says take out extra, and he didn't tell me not to, so I'm going to connect those. He lives in Buckeye Village. I have to take out the tax, but these remaining items are going to be important to know. Since he quit, am I permitted to withhold deferred comp from this last paycheck? Make sure you know that, because if you take it out and then it doesn't get paid, Deferred means you have messed with his taxes on this check. So be sure you're asking. He's not going to have dental and health insurance taken out. That was taken out of his last biweekly paycheck. So make sure you know what to attach. My accounts, it's going to be paid from one account code. He was paid from our road. And I'm going to save that and close. So now he has the non-retirement earning. Since he is never going to be paid any more wages, I'm going to go ahead and deactivate that so I don't accidentally pay him. And we're going to go ahead and close. Our next step is to adjust his leave balance. So I'm going to close these two tabs, go to Payroll and Utilities, and Leave Balance Adjustment. These adjustments have to have supporting documentation. So I have his last pay stub, and I can print a leave balance report to show the amount he has. I also want to consult our leave policy that says when you quit, how much of your leave and which leaves get paid out, and I'm going to keep that for audit. I'm going to choose Steve Friendly from the drop-down list, and notice that he has 426 hours of sick leave and the 77.8 hours of vacation. Well, according to our policy, he's entitled to 100% of his vacation leave. He earned that based on hours that he worked. So I'm going to pay him out 77.8 hours of vacation leave. And I'm going to type that purpose in the box. Vacation leave paid out upon termination. And the date is the 11th. I'm going to go ahead and prepare that check today, and I'm going to post that. Now, I want to go back to Steve Friendly as a second adjustment, and I'm going to review my policy. What does it say about sick leave when an employee quits? Well, our sample sick leave policy says they are not entitled to any payout of sick leave when they quit or are fired. It's only their vacation or comp time that they would receive. That was earned. Sick leave is for sick days. It's not paid out when someone quits or is fired. But if I leave this balance in the employee setup, I won't be able to ever remove this employee. And keep in mind that this employee might go to work for another government that would allow him to have this 426.3 hours certified to them, and he could carry that balance. It won't cost you a penny. So I'm going to adjust off the sick leave he's not entitled to. And in the purpose box, I'll type that purpose. May be certified to a new employer. And I'm again going to date that today. And I want to not only post this, now Steve has zero balance left, and once the year has passed and I'm in the new year, he'll be able to be removed because he's not going to come back. I'll go ahead and close that. I want to print those adjustment reports for his file. So I'm going to go to Leave Reports, and I want the Leave Adjustment Report for Steve Friendly. And notice that it will print what you typed in the purpose box, leaving a nice audit trail. So that gets printed, put in his employee file, and I have it available for audit. The last step is to actually pay his hours, the 77.8 hours of vacation he's entitled to. So payroll, transactions, wages. I'm going to click the add button, warrant EFT, and I'll be careful with the pay period. He's in the maintenance department bi-weekly, and you have to think about what you're going to do. His last pay period that he was paid for was not 3/12 through 3/25. It was 2/27 through 3/11. Think about what you're doing. Now, again, this is a non-retirement earning, so this date is only going to print on his pay stub. It will have no effect on taxes or retirement. It's a non-retirement earning. So I can use the dates that reflect the last day that it should be. And if I choose this pay period, I simply need to document why I'm making the choice. Well, for class purposes, it makes no difference. My employee is not real, so we're not going to belabor that point. I'm going to go ahead and choose Steve Friendly. The only earning I'm selecting is his vacation payout. And I can close and edit. I'm going to enter the 77.8 hours that he's being paid, exactly the amount of his leave, and check his withholdings. Make sure I haven't accidentally withheld health insurance or dental. Notice that there's no OPERS. This is a non-retirement item. This amount is not going to appear on the OPERS report. I have nothing to edit. I click Save and Close. Mark it, and we still have him as EFT, so I can post that. It has to be 2 days out. This is not a regular payday. So I still need 2 days out. It depends on the time of day. I'm going to make that the 14th. Final payout of vacation leave balance. That's a good idea for the stub note. And I'm going to go ahead and post that item. I want 2 vouchers. And that printed successfully. Remember, I still have to create the EFT batch, create the file, and upload that to my bank account. I always display and then print the report. If I manually enter that on my bank's website, I use this report and close. The last thing is to upload that to the bank. Go to my UAN e-files folder and delete these items permanently and keep that folder clean of secure documents. That completes all of the training we have in our book. I hope you found this information helpful. Thank you.